Welcome to the STEM Virtual Investor Conference, where we put a spotlight on opportunities from science, technology, engineering, and mathematics. My name is Steve Torso, and I'm the founder and managing director of Wholesale Investor. During the STEM conference, we will provide you with the closest experience to a live event with keynote speakers, panel sessions, live Q&A, breakout sessions, and more than 28 investment opportunities. Today, you'll hear presentations from companies in sectors such as biotech, life science, healthcare, blockchain, fintech, and crypto. Each of these we love. We want to place a spotlight on these because the opportunity over the next decade is exponential, and the innovation has come such a long way over the last 2 decades that it has really set up an incredible opportunity for investors. And our role in doing this is, whether it be via the keynote speakers, whether it be via the companies that are presenting, is to give you a glimpse into what this future looks like, because it will impact every single area of our lives. As a keynote speaker, we have Natasha Rawlings, who's an investment manager at Uniseed. The topic will be investing for a better future. You'll hear 2 panel sessions. One, a STEM founders and investors session, which is called Bridging the Gap. And 2, a STEM Campfire, which is your opportunity to engage with some of the presenters and speakers that have been featured at the event. Now, of course, the way we actually provide engagement is through our event app, Brella. Inside the Brella app, we also provide AI matchmaking to assist you to find relevant opportunities that match the criteria that you're looking for. As I mentioned, we have set up this conference to be in such a way that you can engage as you would in a live event, but obviously in a virtual environment. Now, for the STEM Investor Conference, we want you to enjoy, because for us, we love providing you with insight into what comes next. That is what we are passionate about. That is what we do on a day-to-day basis. And STEM represents that in so many ways. Enjoy the conference.
Hi and welcome to the STEM Showcase. Throughout this showcase, we'll be having a back-to-base segment where me and Steve will be in the studio commentating on what we've just seen as well as what we're about to see. Steve, anything you'd like to say about STEM just to get started?
Yeah, for me, I did obviously just the intro in regards to the conference, but the reason why I love STEM is that if you look at every problem that is, every problem that we face as a society, really the areas of science, technology, engineering, mathematics are utilized to actually solve that. And from an investor standpoint, there's obviously an exponential opportunity that comes along with that. And a lot of these problems are technical, and a lot of the founders are also technical as well. And for us, what we've seen over the years of Wholesale Investor is that there's this fantastic arbitrage between these technical problems being solved and then the investment opportunity that goes along with it. And we've been fortunate enough to build our name with a lot of these, types of businesses, that have effectively solving global problems, and effectively, you said the companies you see, the things that they're looking at, they are global in nature.
Yeah, well then, in venture capital as an investor, you look for a company that is solving a severe problem, an imminent problem,
yes,
and solving it in a way that has a technological defense as well. And STEM has both those components down packed. And it brings us to our first guest, which is Natasha Rawlings. You mentioned the need for commercial viability as well with STEM Ventures. Yes. And Natasha, who is an investment manager at Uniseed, has been commercializing, or specializes in commercializing university research. Are you familiar with Natasha yourself?
So for me, obviously, for Wholesale Investor, we've known of Uniseed for some time. We've worked with Uniseed companies. We've helped them raise capital, etc. And we've seen over the years, as far as when you see groups like Uniseed, where they've got such a successful track record in how they've worked with a lot of sort of life science and biotech companies, in that they understand that commercialization path really well. And over those sort of decade or however long it's been around, they build up networks, they build up investment capacity, they build up commercialization capacity, they build up, just the intelligence that goes along with that. And I find that because they've got this fantastic helicopter view of what they're seeing in the marketplace, the insights you can extract from someone like Natasha just goes far beyond what you would normally expect.
Absolutely. So Natasha will now speak about commercializing STEM ventures and how to translate research into commercialization, and we'll be right back after the keynote speech.
Hi, and welcome to the STEM conference brought to you by Wholesale Investor. Today, I'm going to be talking to you guys about investing for a better future. But you probably already know that if you're presenting at this conference or looking at investing at some of the awesome companies presenting over these next 2 days. And so STEM investment to me is just another word for deep tech investment. And I'm going to be talking a lot more about what's happening in this space here and around the world, and also UniSeed, where I work, and our special way of approaching this space. And by the way, views are my own, so please don't hassle my boss about anything I say today. It's all on me. Okay, so a bit about UniSeed. Well, we invest in research-based technologies and businesses that are going to change the world for the better one day. We act as change agents in our community to bring diverse groups together to create a future we all want. And that is definitely a big theme in deep tech. So who am I? Natasha Rawlings. I'm an investment manager at UniSeed, and I'm also a startup board member in the deep tech space. What I used to do for a living before I found my way into this area was I was a corporate direct response marketer, both here and overseas. I also did a lot of product development, and I founded and CEO'd my own software business with co-founders, and also worked for a few others along the way. I first got my taste of deep tech, I guess, at Sydney Uni's Incubate, where I've been mentoring for 6 years now. And I also did a short stint as an EIR there. I also CEO'd a not-for-profit for women-led high-growth businesses called Heads Over Heels. And I guess that gave me quite a unique and special perspective of what is stopping women getting ahead in startups. So I'm going to briefly touch on that too, and how you can help. So what is deep tech? Well, there's many words for this. STEM, which the conference is focused on today, but it's another word for deep tech or hard tech or frontier tech. I choose to use deep tech because it was actually coined here in Australia at Cicada Innovations some time ago, and it's now being used throughout the world. So being a bit parochial, I like to use that word. And pretty much generally it is lab grown. So it goes from lab bench into the wild, into the market, because its core invention is based on science and usually a patent protected product. It has an ESG flavour. It almost can't help but having one. And obviously that means it's closely aligned to impact investment. And impact investment is more and more focused on those 17 UN sustainable development goals. If you don't know what they are, you can easily Google it. For the most part, these sorts of businesses try and make an impact. So they solve a big, wicked problem of our time that is either facing people, the planet, or both. It is always profitable or looking to be profitable and is measurable. 20 or 30% of the world's capital is now flowing into ECG-focused businesses. And finally, deep tech is a catch-all for all sorts of technologies, but not usually plain vanilla software. So it includes clean tech, and carbon capture technology is really stealing the headlines there at the moment. Biotech, but biotech can be broader than just drug therapy development, which is where biotech, or the name of it, is focused. It could also include lab-grown meats as well. Of course, there's robotics, new materials, and in ICT, we're usually talking about AI. And of course, some of these things can be blended as well. Okay, so what do all deep tech businesses have in common? And by the way, all of my stats are taken from reports that have been developed by BCG and Hello Tomorrow, an accelerator incubator over in Europe that also does conferences and has done quite a lot of research in this area that really resonates with me after my 4 years here at UniSeed. So the first thing is that they're problem orientated. 97% meet at least one of the UN Sustainable Development Goals. They also look to use the best existing or emerging technologies to solve the problem on hand. And what's really interesting is that 96% of these businesses actually use 2 or more technologies together. So a really good example of that is my most exciting invention, I guess, that I've seen is a bionic eye that combines solar technology to power a battery that is in people's heads, behind people's eyes, and uses software to translate images that the eye sees to the brain. So it can make sure that it's actually, or, translate the image that is being seen by the eye into something that we recognize. So the big thing about deep tech, of course, is that it affects our real physical world. So it's moved from digital to physical, and about 83% of deep tech has a physical product. And if we're in digital, we're actually talking about AI, ML, or some advanced computation focus. And finally, it really takes advantage of new cross-organizational ecosystems. We're not just talking about startups and investors here. We're moving much broader to universities, to obviously accelerators and incubators, which are in the normal ecosystem, but also large businesses and government. It takes a lot of villages to raise one of these children with lots of different specialties. And they need a lot of large funding from the start as well. Around the world, there's about 1,500 unis that are involved in deep tech. So some trends in deep tech. Well, I'm here to say that there is a path. It might still be a bit of a bush track that you need to get a machete out for, but it is being used, but the path isn't being used enough. It's not a roadway yet. So the first thing to say is that in the last 4 years, investment into this space has grown fourfold. It's grown from about 15 billion in 2016 to 60 billion or more in 2020. But it's still considered a niche investment. And with 1.9 trillion sloshing around at the moment in private equity and VC, you can see that this amount of money is just a small drop in the ocean. Now, of all that money going into deep tech, 75% of it is directed to AI and synthetic biology at the moment. 75% of the pool is also only invested in the USA. So there's a lot of money left on the table, which means that the world's biggest problems aren't being solved. And more than that, great opportunities are not being taken advantage of. Lastly, and I'm going to talk a bit more about this, the road forward looks different for these types of businesses. It takes investors who will hunt for deals, be hands-on in putting it together and attracting other resources and collaborators to really get these small seeds and have them grow out of the ground to be big trees one day. Now, I love this schematic. It's the 4 paradoxes of deep tech investment. I've been doing this for 4 years now, and I've been so fascinated by, what's working in this space and what isn't, and why there isn't more money flowing this way. So again, thanks to BCG and Hello Tomorrow. So, if we're going to get into deep tech investment, what sort of orientation do we have to take? So the first paradox that we have to look at is the mindset paradox. And I find this really fascinating because if you think about VCs, they're meant to be investing at the really risky end of the scale. And in fact, they have spent a lot of time at the vanguard of new advanced science and breakthrough technologies. But what's happened over time is that they've all fallen into either ICT or biotech, and they don't feel like they know enough about other areas to start investing in them. And so they don't. And so what we're seeing is that that mindset is stopping the flow of capital going to deep tech businesses. there's also a risk paradox. So a lot of VCs think this area is too risky to invest in because they want to keep investing in things that they know. But the problem with that is that the things that they've invested in are now becoming the incumbent organizations, and they are going to be uprooted at some point by these new technologies that are coming on. So it actually doesn't make sense not to invest a bit in these new areas to protect yourself and, hedge your bets a little bit. And then, of course, there's a barrier paradox. So a lot of the funds in the world are going into these huge legacy funds, which aren't investing in new areas like deep technology. But at the same time, and I can really see this in the universities I work with and the CSIRO, that new technologies and new inventions are growing exponentially as we find out about our physical world and unlock some of those mysteries that we've been wondering about for ages. And so we've got high growth in innovation, but also, again, a block to money coming into the area to really move these things along. And finally, there is a funding paradox. There's 1 point whatever trillion of money sloshing around at the moment in dry powder, but deep technology is still a fledgling sort of asset vertical. And although everyone realizes that these sciences are the new way for investment, there's not enough people jumping in yet. And so I thought that model was great to explain what was happening. So now a little bit about Uniseed and what we've been doing, and maybe some hints and tips for you guys looking at investing in deep technology as well, because we've learned a lot along the way. And what I'm really happy about is that, we're not the geeks in the corner at the party anymore, talking to just our own friends, where we're making lots of new ones as well as this asset class becomes more popular. So we were created 21 years ago by universities for universities, and we've had to do things a bit differently because of our why and the special handling that a lot of deep tech early stage businesses need. So quickly, our purpose is to facilitate commercialization of our partner university intellectual property, and that includes CSIRO, and to also operate under the financial and commercial disciplines of a fund. So the problem we were set up for to solve was the fact that for inventions to get really free from labs, they need to follow up a commercial path. But there's really hardly any money around for early stage deep tech ventures. And even before money can flow in from the venture community, there's this massive, what they call valley of death. And it's where government funding ends and other investment starts. And we're there really to fill that or build a bridge, I guess, across that valley of death to help more technology get into the world that can make a difference. The other thing, of course, is that most researchers don't know that there is a commercial path to impact. We're here to change the culture and I guess the role models around that. And of course, Australia generally just sucks at translating research out of labs. There's very, very few role models. As I said, we're in the bottom of the OECD countries for being able to do this, although we produce 3% of the world's research, which is kind of nuts considering our population number overall. And so we've been doing this new type of normal investing for a while, where we actively seek deal flow. We make opportunities into businesses. We are huge collaborators and connectors throughout our network, obviously including universities, but also government as well. And we pull everyone in our ecosystem together. So happy anniversary to us, happy 21st. And we really believe that 2021 is the year for deep tech in the way that 1995 was for digital. We've been doing this for 21 years now, and this is the time, because of the pandemic, because of the climate crisis, because scientists are our new heroes. we feel like it's our time now, and we're everyone's flavour, which is really nice. Over time, we've done 60 startups. We do now about 5 to 6 a year on average. The current companies are employing 650 people. We've attracted nearly $700 million in investment and grants alongside us. And we've had 10 exits, which is not such a bad innings for this area. We invest in everything, every flavour of tech, from Canoxus, which is a drug therapy, these are 4 of them, to wildlife sensors to make wildlife researchers' jobs easier and quicker, smart motorcycle helmets. And here's a plug for Perky. Next time you're at your supermarket, go and look at the kombucha shelf and have a look at Perky. It is encapsulated good bacteria that gets all of that goodness straight to your stomach. So it's not destroyed in the process as it goes through your guts. So it's a great product. I had one this morning. So what do we look for in a deep tech opportunity? And so this might help you as well. So first of all, there's some proof that customers will buy it. Foresight, when I invested in them, had 400 customer questionnaires, which people had taken 10 to 15 minutes to complete. It was a real vote of confidence. Wildlife Drones had $150,000 of orders sitting there that they couldn't fulfill because they just couldn't get to that next stage of building their commercial product. I like to go out and speak to potential customers and say, if I came back to you in 6 months, would you buy this? Because that's when you get the real answers. So that's probably the most important thing. I see a lot of solutions looking for problems. It's quite hard to find technologies that are solving a problem efficiently already. That there's a moat. It's a patent, obviously, or it's execution if you're already in market. You've done a lot of really good stuff at a good pace. That there's not too much competing research. What have other researchers published elsewhere? We always invest if there's a proof of concept or a working prototype or a lead molecule that can scale. Never believe anything anyone says. Have a look at it. Make sure it's working. Can people work with you? This goes for everything, but some researchers can be quite difficult, as we all can be. And if they can't work with a team, then it's pretty hard to get going with that technology. And then business model, exit risk, that's pretty normal. And we ask for a simple company structure. The uni has equity only if it's been developed by their employees. The rest is pretty normal, other than team. Obviously, if we're putting a lot of the team together, that's less important. And that's probably a big difference between founder-based funds and ourselves. So here's, I always end on an ask, or a couple of asks in this case. So this one is about a final word about women. So, we're still vastly underrepresented in high growth startups, especially at that CEO level, and in science as well. And the ESG needs an S for social, and that means diversity in gender and across neural diversity and cultural diversity, et cetera, et cetera. So the more women we see doing this, the more there'll be. Role models are so important in this as they are in everything. Always take a meeting with women and help them along where you can, especially with introductions. Women don't have the business networks that men do, so that is so helpful. Of course, be aware of your own biases and pattern matching. We all have them, us women too. So just be a little bit more self-aware and think about what's running through your head when you're seeing people talk to you. And, is that a correct perception or not, and why? And also call out lacking behaviour with kindness. We're not going to change things by being confrontational, but just picking things up when they're said in a kind and maybe humorous manner helps everyone. And this is my second ask. Look out for our UniSeed podcast, which is coming out in December. It's going to be looking to answer why Australia is not commercialising research more successfully and why it's so important for our future economy and the world's happiness. So that's it for me today. Thank you so much for your time. Please feel free to reach out if you want to get involved, n.rawlings@unic.com or at TashSR on Twitter. I look forward to picking up a conversation with you. Thank you.
While companies' access to investors has improved, individual investors continue to struggle with access to the strongest, fastest growing companies within our region. What makes LitiCapital unique is our commitment to make a difference in this ecosystem, to find the gaps where we can bring our expertise and know-how in order to assist investors and make an impact in their investment management process. We have created LitiCapital for investors to participate confidently in exclusive and scalable investment opportunities. This will be alongside a community of investment professionals. We are committed to nurturing your investments through innovation.
Some real genuine insights by Natasha there, and a big feature of this conference is the fact that you can reach out to all the speakers and panelists and founders via Brella. So if you do want to engage with Natasha, you have the option to book that one-on-one meeting inside the Brella platform. Now, we're up to our first slot of presentations, and the first slot is under the segments of biotech, medtech, life sciences, healthcare, wellness, and Australia has over 161 life science companies alone listed on the ASX, which is a great indication as to where the potential for exits lie. And at the moment, the approximate value of the sector on these companies on the ASX is $170 billion. So we have a variety of them coming up. And what's been your experience with these sort of companies in the wholesale investor ecosystem over the last 12 years?
So I think life science and biotech is a bit of a bug that you get a hold in your systems. For us, our first experiences with life sciences goes back to Biotics, and we worked with them in 2009, and at that time they were very much sort of unknown. And we've watched them go to become one of the largest sort of private, sort of public unlisted companies in Australia. And wholesale investors' history, and for me, that's when I got fascinated by what was happening in the Australian life science space. And for a very, very long time, it's been well known that there's a big, and going back to that value arbitrage, in that Australian life science valuations are very low compared to a lot of their international counterparts. And that's represented an incredible opportunity for Australian investors actually in this space. And we've seen that with companies and said clients like ours with Imugene. Imugene is a perfect example. I remember working with Leslie and Paul Hopper back when it was at 0.007 cents or something like that, or 0.01 cent. Now when we see them at a $2.5 billion market cap, and and basically in a sort of 4 to 5 year time, it gives you some sort of perspective as far as the opportunity that as life science companies and biotech companies go through their different stages. We've also seen some incredible companies like 4D Medical, who we were privileged to work with during their seed stage. We've now watched them go on to not only list on the ASX, but to start to commercialize, once again on a global basis. So I said for Australian Vet, this has been this space sits in my heart. It's one of my favorite spaces to work with. From our investor database, every time we do investor surveys, the life science healthcare has been typically our top sectors. And today, some of the companies participating, as I said, one of them I mentioned about Paul Hopper and Imugene, said in the lineup for today, he's also part of one of the companies that's going to be presenting actually at our ASX event coming up. And I said, when we look at this space, I said this space does take time. It does involve patient capital, but the outside opportunities or the outweighted sort of returns that investors can experience in this is the reason why it's so attractive to Australian investors.
And when the time's invested into R&D and they're establishing that economic moat, because with each minute and hour and month and year of R&D, you are a stream ahead of your competitor, especially if you're solving a very novel problem as well. So I'm very excited with these. I think we've got we've got 7 companies coming up, 7 investment opportunities coming up in this sector, each with unique offerings and value propositions.
And I just want to bring attention to Novapep, who we've been working with for quite a few years. You know, Jay's a very, very experienced CEO and founder and also advisor in this space, in actually taking innovations out of universities and then going commercializing them. And what you find is typically the CEOs and the founders of these companies, they do have strong experience in this space. Like, this is often not their first rodeo. So, so when you look at the teams behind these companies, they really do go to represent what the potential for these opportunities are.
Absolutely. So we'll let them present. We'll sit back and watch with you guys, and we'll check back with you right after this series of presentations.
Hello everyone, my name is Matt McNamara. I'm the Chief Investment Officer of the Horizon 3 BioTech Fund, which is a $100 million biotech later stage venture capital evergreen fund, aiming to deliver at least 20% IRR net to investors. And the important notice highlighting this fund, it's for sophisticated investors only. We are an experienced group of biotech investment executives with the purpose of improving lives globally. To qualify as an attractive investment prospect for the fund, portfolio companies need to be relevant to the markets in North America, Europe, and Asia. The technology cannot be a fast follower or a Me Too product, and it needs to be a leading edge technology delivering a biotech breakthrough. The biotech sector is booming, particularly since the pandemic. We at Horizon 3 Biotech are seeking to deliver unicorns from our portfolio of 10 biotech companies. The S&P Biotech Select Index has doubled the S&P 500 over the last 10 years. The biotech sector is being driven by macro and industry tailwinds, such as aging population and demand for growth by acquisition. In addition, 3 of the most populated countries, Indonesia, China, and India, are forecast to grow 200% plus over a 14-year period. The biotech sector is no stranger to delivering unicorns. In fact, later, when discussing my track record, I will highlight 3 biotech companies that I have invested in that have gone from sub 100 million valuation to greater than 1 billion. Further evidence that the biotech sector is going from strength to strength, venture capital funding has significantly increased year on year, as has the number of deals and biotech IPO funding raises, all resulting in the biotech sector representing almost 8% of global VC investment, which helps explain the successful first year that the Horizon 3 Biotech Fund has had. $88 million of funds committed, the average investment into the fund being $1.8 million. However, the minimum required is only $50,000. The Horizon team has reviewed over 100 biotech investments in the last quarter, made 4 investments this year, and deployed $8 million. Our team's definition of biotech is the cutting edge of human healthcare products, drugs, devices, diagnostics, and digital products, not service companies like hospitals, pathology, or aged care. Our investment strategy is to de-risk our portfolio companies, be high conviction active investors, typically on the boards of our private portfolio companies, with global deal flow from our internationally networked team. Normally, biotech investing is long-term and very risky. We will invest in a diversified group of 10 later stage companies that, after a thorough due diligence process, we are confident are de-risked and can deliver a 1x return per annum of our investment over a 3 to 5 year period. Our differentiated approach to biotech investing can be summarised as follows. Firstly, we reduce the risk in biotech investing by avoiding early stage startups and only selecting companies with development runs on the board. Traditional biotech VC investing takes up to 10 years to reach an exit. Later stage biotech investing is more akin to PE. We call it growth equity investing, where we only invest in companies that have progressed significantly. Secondly, we reduce the risk in biotech investing by only choosing investments that have 1 or 2 valuation inflection milestones to achieve in a 2 to 3 year timeframe. That will then be attractive acquisitions for a trade sale and or on-market exits. The reduced number of milestones required to attract an exit reduces the timeframe the investment is held and provides our investors liquidity events via exits on a rolling basis. Thirdly, by investing in later stage public and private global companies, we increase the number of successful portfolio investments compared with traditional local venture capital investing. These graphs represent my more than 20 years of biotech VC investing. Traditional early stage investing typically results in 1 good success per fund over a longer period, whereas the later stage investment strategy typically results in a handful of successful portfolio companies and thus represents a lower risk, diversified portfolio that will more consistently deliver greater than 20% IRRs net to investors. Our Achilles heel approach to reviewing our extensive global deal flow allows for a fast fail mechanism, which firstly must fulfill our purpose of saving lives globally. Then the company must have all the key assets in place, and finally a clear plan to exit. An exit which will typically be trade sale or on market. My track record spans over 20 years. First, an early stage pre-seed fund where we had 1 success out of 10. In the 14 years at Bioscience Managers as Chief Investment Officer, managing industry superannuation, federal government and high net worth monies, we invested in later stage companies. With $200 million across 3 funds, we achieved 22% IRR realised and was tracking at 24 and 44% IRRs when I departed. Here I highlight 3 companies that went from sub 100 million market cap to greater than $1 billion valuations. Heartware, a left ventricular heart pump, Vita Medical, which will be familiar to many of you, spray on skin for burns and wounds, and Saluda Medical, a spinal cord stimulator with a proprietary closed-loop feedback mechanism. I'm fortunate to chair the investment committee that we assembled with a broad cross-section of skills required for successful biotech investing, including funds management, investment analysis, drug evaluation, clinical trials expertise, business development, and commercialization expertise, all backed by a commercial board with experience in biotech, investing, deal-making, and corporate governance. The Horizon 3 Biotech Fund is a $100 million evergreen unit trust, aiming to deliver greater than 20% IRR to investors with regular distributions and liquidity opportunities every time we divest a portfolio company. So if you or your clients are looking to participate in the biotech sector with an experienced biotech investment team and contribute to improving the lives of people globally, we invite you to choose a de-risked later stage strategy to spread your success across a portfolio of 10 public and private global companies that will reach valuation inflection point quicker than traditional VC investments. I look forward to hearing from those that would like to know more. Just go to our website, horizon3biotech.com, and request a meeting. Thank you for your interest.
Welcome. My name is Jeremy Crisp, and I'm the founding CEO of EpiAxis Therapeutics. And it's my pleasure to present on behalf of our team. As the name suggests, EpiAxis is a therapeutics company, and we're developing a pipeline of epigenetic cancer treatments led by our LSD1 program. There are 4 key messages from this presentation. The first, that we're using LSD1 inhibition as our strategy to reprogram cancer cells and to restore the immune system. Secondly, we're developing first-in-class peptides and small molecule inhibitors. Thirdly, we're offering new treatment using those inhibitors to address many of the shortcomings that are offered by existing therapies. And this has applicability across many different cancer types. And fourthly, we have a novel mode of action with our inhibitors and a dominant IP position across our deep pipeline. At EpiAxis, we believe that reprogramming cancer cells offers a new therapeutic approach in cancer management. This is because the traditional cancer therapies aims to destroy or eliminate cancer cells, but they have a high failure rate with significant toxicities. And this is because those cancer cells can evade therapies, particularly given their dormant phenotypic characteristics, which later causes metastatic disease. They also become resistant to therapies, which makes them even harder to treat. And this is why new and better treatment approaches are needed. We also believe that LSD1 inhibition offers a new way to treat cancer. And the rationale for this comes from the fact that those cancer cells are able to use epigenetic change, such as demethylation, to control their behavior. And LSD1, or lysine-specific demethylase, is a nuclear-bound demethylation enzyme that is substantially increased in metastatic disease. And therefore, LSD1 inhibition offers a new program to allow us to reprogram those cells away from their aggressive phenotypes. Our approach has wide applicability across many solid tissue tumors, given the fact that they overexpress LSD1 in the brain, in the breast, in the colon, in the liver, in the ovary, and in melanomas. It also applies equally so to hematological malignancies. The market is huge and global, currently valued in excess of 160 billion. It has a growth rate of over 14% year on year. Our lead indication is metastatic breast cancer. This is because there's a huge unmet demand, given the fact that sadly, 30% of all women who are diagnosed firstly with breast cancer become metastatic ultimately. And this accounts for the majority of the deaths from breast cancer. It has a high impact, given that there's over 2 million women who are diagnosed annually every year with breast cancer. We have extensive data supporting this thesis that LSD1 inhibition can consistently target these dormant cancer cells and lead to the reinvigoration of immune cells. This is from work from our cell lines in mice studies and in our clinical programs, including our pivotal phase 1 study. In that study, which was directed at metastatic breast cancer, we used phenosine sulfate as our surrogate LSD1 inhibitor in combination with standard of care Abraxane, which, as you can see on that graph, dramatically and significantly so reduced nuclear LSD1 down from 100% down to 20% in the higher dose of 60 milligrams of phenosine over the clinic visits. And this was a period of 85 days. At the same time, this dramatically changed and removed the aggressive phenotypes from those circulating tumor cells. We also have an extensive pipeline led by our LSD1 program, but supported by an earlier stage PKC theta program and a pan-demethylase, giving us coverage across a number of solid tissue and hematological malignancies. We have very strong intellectual property, including the pivotal US patent for the use of all LSD1 inhibitors in combination with chemotherapy or radiotherapy or immunotherapy or with surgery. All the IP is owned by EpiAxis. This covers both composition of matter and methods of use. We have 11 families in total, 9 of which now are granted, and we've been prosecuting globally in 8 jurisdictions. Supporting us is an extensive management team and advisors. Our advisors are both domestically based and international, with exceptional domain expertise behind them. Also, we have a highly experienced board led by our chair, Dr. David Fuller, supported by 3 international board members and Professor Pamela Munster, Dr. Kia Larcono, and Dr. Jeanette Wood. I myself are based in Sydney with our chair and Rob McGuinness, with Nick McNaughton and Branhoff based in Canberra. We have a strong network of external advisors both in a professional capacity and in a preclinical capacity. I'd like to share with you our roadmap, which commenced in 2015 with the incorporation of EpiAxis Therapeutics, through to 2017 when we enrolled our first patient in our pioneering proof of concept study. This was concluded in 2019. The last couple of years have been very much focused on our small molecule and peptide programs, looking for lead optimization, capital raising commencing at the end of this year. Those funds will be used to support our IND enabling programs, with a phase 1 program planned for 2023 to coincide with an IPO. In summary, we have a pipeline of epigenetic assets targeting oncology, led by our focus on LSD1. And of course, LSD1 inhibition, we believe, allows us to reprogram these cancer cells and drive immune reinvigoration. We're developing first-in-class assets, both peptides and small molecules. And we're offering new treatments from those inhibitors to address many of the shortcomings from the existing therapies across many tumor types. We have a novel mode of action with our inhibitors, dominant IP across our deep pipeline. And of course, we have an experienced team with very deep domain expertise supporting us on this journey. So thank you very much for your interest in EpiAxis Therapeutics, and we very much respect and look forward to hearing from you. Thank you.
Novapep is a US-Australian biotech company which is developing structured peptides for diseases where there is an unmet medical need. Novapep's technology is based on 20 years of breakthrough protein research and development. Activated protein C, or APC, is a modified human protein which is anti-inflammatory, protects against unprogrammed cell death, and is regenerative. And APC has been shown to be effective in numerous diseases, including inflammatory skin disorders and inflammatory bowel disease. However, APC is very expensive to manufacture. It needs to be stored at -70 and is only being developed for high-dose intravenous administration in sepsis and in stroke. Novapep's Chief Scientific Officer, Professor John Griffin of the Scripps Research Institute, has developed a peptide structure called G10, which was patented in 2019. G10 is a mimetic of APC and is an order of magnitude cheaper to manufacture and is stable at room temperature. This is a very exciting breakthrough for Novapep, and we are now developing G10 to treat dermatitis, burns, and IBD, inflammatory bowel disease. The standard topical treatment for dermatitis is corticosteroids, with global sales of $2 billion. However, one of the side effects of prolonged use is permanent thinning of skin, which can worsen the condition. Novapep has done a dermatitis animal study with part of the G10 structure, and it was as effective as corticosteroids, but with none of the side effects. Subsequent tests have shown that the full G10 structure is up to 10 times more potent than the peptide structure used in our dermatitis study. Annual global sales of IBD drugs are $16 billion. However, the use of oral steroids is limited due to the adverse side effects. Most of the IBD drugs are expensive biologics, which need to be intravenously administered in a hospital setting. Clearly, there is an unmet medical need for cost-effective, easy-to-use therapies, and accordingly, Novapep is developing an oral form of G10 for the treatment of IBD, inflammation, and pain. Our milestones in 2021, including raising $600,000 in funding, and we've paid for the G10 license from the Scripps, and that includes the 2019 composition of matter patent, which gives us protection out to 2039. Under a Novapep contract with the Scripps, John Griffin's lab has optimized the G10 molecule for topical and oral administration. Novapep has developed an FDA-compliant gel for topical delivery with the University of Sydney, which is a Novapep shareholder. Novapep has added burns to its target indications, as there are a number of similarities between burns and dermatitis damage. And finally, Professor Laurent Monnier, who co-invented G10, has joined our SAB, our Scientific Advisory Board, and is researching other target diseases for G10. The current $1 million raise will allow us to complete animal studies in 2022 and start final G10 preclinical work leading to a phase 1 clinical trial. We will then seek pharma company development partners and undertake an IPO of the company. Thank you for your time, and I look forward to discussing Novapep with interested parties.
Welcome. My name is Paul Tan. I'm the founder and CEO of NZeno Limited. I'm here to tell you of a new business opportunity with medical grade pigs developing gene-edited pig kidneys that will significantly improve the lives of people with kidney failure. In the life sciences and biotech, the last few years have produced new technologies that allow us to create gene-edited pigs and gene-edited pig kidneys for an enormous medical need and an equally enormous market for donor kidneys. As a company, we now have a herd of medical grade pigs. We are now in the R&D phase of gene editing with professionals in industry to develop pigs compatible for human transplantation. And we're seeking the first tranche of $3.5 million US to get us there. The problem is very well described by The Economist. Kidney failure is a huge medical problem. But at the same time, there is a chronic lack of suitable donor kidneys. In the US, for example, there are 500,000 people who are on kidney dialysis just to remain alive. And there are only 20,000 kidney transplants done a year. And the same problem occurs in Europe. And in China, the problem is escalating rapidly. The solution is to use pig kidneys because pig kidneys function similar to human kidneys, and they provide a sustainable source. And we have a unique herd of pigs that are free of viruses and infectious agents, ideal for this purpose. But pigs do need to be gene edited to overcome the immune rejection. Pig cells are gene edited in the laboratory, converted into embryos, and the embryos are transferred to surrogate sows to produce gene-edited pigs. There are other groups, academic and corporate, who see the same opportunity. They have raised up to $255 million US to do the gene editing. And in fact, in the US, the first gene-edited pigs have been approved for human consumption to treat food allergy to red meat. Pig kidneys function well in monkeys, and pig hearts function well in monkeys in the US and in Germany. But no one has shown that or have placed pig kidneys in humans. We're in this field, and our advantage lies in having biosecure New Zealand pigs that naturally do not have retrovirus genes and hence do not need to be edited for retroviral genes. They have a safety record in humans that no other herd has because they have been used in human clinical trials. As executives, we have previously developed pig cell therapy to first-in-human studies. New Zealand is a special regulatory environment in having previously approved pig cell therapy in human clinical trials. So we're at the stage where we have the pigs and we have started gene editing. Our major milestones are to show that these gene-edited pigs are compatible and matched with other humans, to show that the kidneys from these pigs function in monkeys, and we have to get to the first human clinical trial in 3 years. The value of the business lies in having these gene-edited pigs and the clinical data, which will then allow us to license medical-grade pigs or specific organs such as kidneys, heart, or lungs. It will certainly generate conditions for an IPO and the sale of a company. Gene-edited pig kidneys are valuable. Our first financial projections show a return of $37 million US for the first upscale, modest pig facility. And if we were to scale this up 10 times, that will only meet about a quarter of the current wait list for kidney transplants in the US. That is how big the demand is, and there will still be people waiting for kidney transplants. As an executive team, our board has many years' experience as executives and board members on life science companies, startup companies, as well as growth companies. Together with Olga Garkovenko, the CSO, scientific officer or chief scientific officer of our company, we have developed pig cells to human clinical trials. We have unique experience in xenotransplantation at R&D level, GMP manufacturing, regulatory approvals, and conducting human clinical trials in xenotransplantation. Over the years, we have identified experts in the field of xenotransplantation. In New Zealand, we work with Ag Research, who are experts in the field of large animal gene editing. We have colleagues in Germany who are world leaders in developing pig hearts transplants in baboons. And the group in China have an enormous experience with gene-edited pigs as models for further development. As a company, we have invested $2.5 million US to get to this stage. We will need $10 million US to complete clinical studies. A successful clinical trial will increase the valuation of this company by at least tenfold. And at that time, we will need additional investments to expand and enter the market. But for today, the offer is to raise $3.5 million US. $3.5 million US will allow us to complete gene editing and obtain gene-edited pigs. The details of this offer and details of this valuation will be available on request. Please contact us through the CRISP deal room, and we look forward to you participating in our business. Thank you very much.
Hi, my name is Ina Bergstaller. I'm founder and CEO of Bionabu. We connect experts in health and life sciences with professionals seeking meaningful answers and collaboration instantly. Being in the industry for more than 15 years, me and my colleagues I still experience the same problem. We have to go through multiple sources to share information, learn, and collaborate. And we're still left connecting the dots. There is a smarter way to learn and collaborate. Bionabu connects experts from around the world to unlock their potential by virtually meet, learn, collaborate, and share knowledge. And this is all in one place. How does it work? An ecosystem, a community that curated and personalized. And it's also fun and engaging. We're early, but our fans and experts love Bionabu. They actively provide feedback and help build the Bionabu. Trusted brands are signing to be on the platform. This is a great proof, right? Our core experts are the health tech incubators who are signing to be on our platform. Bionabu connects tight community of professionals where incentives on both parts are highly incentivized. Tectonical behavioral shifts are already taking place, and COVID-19 proved us how important it is to timely collaborate and share information. So creating a new category that encompasses the best peer-to-peer learning, freelancer platform, masterclasses, all roll into one. Our business model is scalable, freemium model with multiple revenue sources, including recurring revenue. There are fees on the platforms for consulting jobs, advertising, and subscription packages. We're going after massive addressable market of 12 billion. And this doesn't even include expansion on other industry and proprietary content, including video. Our growth playbook is hard to replicate because it's built by domain experts. Partnership, community engagement, online marketing. This is our strategy. So achieving 36 million in year 5 with 50,000 users at the low CAC is our projection. Our well-balanced team includes industry experts in healthcare and technology, including leaders in the industry with lots of years of experience. So we're seeking for 400,000 pre-seed to expand our technology development, hire key roles, and hire more people in sales and marketing. There are 6 reasons to invest in Bionabu. First, to market with innovative open knowledge platform, massive addressable market with expansion opportunity, network effect, scalable model with multiple revenue sources, and leadership team. And all this for build for purpose solution to better serve our patient. Please get in touch. We would love to hear from you. Thank you.
You already know that stress and anxiety are the most significant root causes of illness and cost the world trillions. The holy grail is to alleviate the corrosive effects of stress without medication or dependency on talking therapies. Certainly, meditation is very effective if conducted expertly, but only a tiny percentage of us apparently are able to establish regular meditation practice. Eminent physicians have found that the silver bullet to stress resilience and alleviation is what is referred to as good vagal nerve tone. From now on, I'm sure you'll hear a lot about the vagus nerve, that's VAGUS, and that might even change your life. So far, this has only been possible using expensive equipment and in specialist clinics like the Cushnack practice or the Mayo Clinic or the New Medicine Group. What you'll hear about now is a much needed disruptor and problem solver for the world of stress. I'm Anna Gudmundsson, the co-founder and CEO of Biotechnology, which is the maker of Sensate. My background is all in tech at every stage from startup to multinational, including turnaround CEO and leading development of pivotal marketing technologies. Let me introduce you to my co-founder, Stefan Schmelik. He founded the biggest integrated health group in the UK in Holly Street, which is like the Wall Street of top medical specialists in the UK. He's a physician with 30 years of clinical experience working with tens of thousands of patients with stress and trauma-related conditions. In other words, Stefan is the real deal. Stefan, please tell us about Sensate.
We've had a vagus nerve for around 500 million years, but a human brain for only about the last 1 million years. So our primitive vagus is infinitely more deeply hardwired into our threat response than our human brain. Put simply, the vagus nerve controls the stress response. We know that good vagal nerve tone is the single biggest contributor to recovery and ongoing well-being of patients suffering from the overwhelming effects of stress and anxiety. My challenge was to find a non-invasive, consumer-friendly way of improving vagal nerve tone that can reach the hundreds of millions of people who need it versus the few affluent people who can come to our clinic. This is how it works. You recline and you place the Sensate on your chest, on the sternum. You choose a session from the app, headphones on, you sit back, and you allow the Sensate to do its work. The Sensate device emits infrasonic vibration synchronized with sound and frequencies to your ears. The outcome is a physiological response leading to profound calm within 10 minutes in virtually all users. It just works. 90.5% of survey respondents found that Sensate was equal to or more effective for stress, anxiety, and insomnia when compared to prescribed drugs, meditation, breathing exercises, or other relaxation technology. In the clinic, this level of physiological activation requires an array of technology. Sensate eliminates the kit by turning the body into a sound instrument using bone conduction and thoracic amplification to target the nervous system, specifically the vagus nerve stress response.
As we all know, there is a very large market out there. We launched the very first Sensate device and app in 2019, and we're selling online direct to consumer. We already have over 14,000 customers. Our cash efficiency means that we've got this far on only $1.5 million. The next stage is to introduce a premium subscription and transition the full offering towards a subscription-based business model by Q2 next year. Obviously, this both benefits the user in terms of a lower barrier to entry, and it increases the lifetime value. Ultimately, we're building an ecosystem of products and digital services that will provide sustainable growth in an incalculably large market. We're on track for $4.2 million in revenue this year, and our current raise will help hit those targets. The size of the market, together with our traction and importantly, the evidence in terms of our outstanding usage numbers, allow us to be quite ambitious over the next 5 years. This will be supported by our recurring revenue model.
There's a near-term opportunity to participate in a SAFE, that's a simple agreement for future equity. Although we have exceeded our initial targets and also recently received a larger investment of $500,000, there's an opportunity for additional investors to join the SAFE. The SAFE offers preferential valuation cap and discount. The minimum ticket size is $50,000. Both of our VCs, so 10 Ventures and Unlock Venture Partners, are participating, which also offers some additional comfort in terms of DD.
Are you or someone you know continually losing, misplacing, or forgetting your glasses and you can't read your smartphone? That's me. My name is Darryl Edwards and I'm CEO and founder of ForgetSPECS. I'm farsighted, which means I can't read without glasses. Forgetting or losing your glasses means you lose touch with the world. You can't read emails, you can't read texts, you can't take photos, you can't read Google Maps for directions. You're lost. We've developed a solution at ForgetSPECS. ForgetSPECS is a prescription screen protector for your smartphone, digital watch, tablet, and other devices. It protects your device as well as correcting vision. Now you can read your device anywhere, anytime without glasses. We've embedded millions of tiny lenses into a thin film that sits on your phone like a screen protector. In fact, it replaces your screen protector. Our lenses are so strong they cover a range of prescriptions from -3.5 to +3.5, which means it's one screen fits each phone model. We've completed extensive prototyping and have successfully produced 100 foot of continuous film containing our screen protectors. Since then, we've been refining our designs to improve our customer experience and are currently awaiting our final prototypes for iPhone X and 11 Pro. ForgetSPECS is patent-pending nanotechnology. We've applied for PCT international patents across 8 jurisdictions. Our market research shows that 83% of respondents feel lost and frustrated when they forget or lose their glasses. However, 100% of people want to be able to read their device anywhere, anytime without glasses. In fact, 100% of people want to be our trial customers. Over 2.2 billion people globally need glasses to read. It's a genetic affliction. It's a part of the aging process that will affect most people once they reach the age of 40. And it's a growing market because of aging population and increased screen time, predicted to grow at 7.7% compound annually. But it's not only smartphones. Customers tell us they want to be able to read their iWatches, Fitbits, Garmins when they're out exercising. They want to be able to bike, hike, jog, ski without carrying their glasses everywhere they go. The applications for our technology are endless. ForgetSPECS will be available online through our website and through online partners like Amazon and eBay. We're already attracting traffic and interest globally. We've been approached by numerous distributors throughout Europe, Southeast Asia, and North America, and we're currently investigating distribution through optical chains, electrical retailers, pharmacy chains, and phone companies. We've assembled a team of high-caliber advisors to guide us through commercialization, with over 30 years' experience in international markets, supply chain and logistics, law, industrial design, and commercialization. And our IP strategy and implementation is managed by patent specialists, Spruson, Ferguson, patent attorneys. Queensland University of Technology have been our technology partners from the outset, and we now have an in-house optical physicist who is completing our designs for us. Our first phase will include rollout of Apple and Samsung phones. We currently have 15 designs ready to commence moulding. Our multi-brand, multi-device strategy will see us move into watches, tablets, and other brands and other devices. To achieve this, we need to complete our seed round raise of $1.5 million. This will be used to recruit talent in sales and marketing, assist with production, build out our product range, and execute our marketing strategy. When we completed a competitor analysis, there was, and still is, no other prescription or optical screen protector in the market. Our closest competition is contact lenses, which are uncomfortable if you've ever worn them. Magnifiers are cumbersome and don't show the whole screen. Laser and lens replacement are expensive at around $5,000 per eye. There is no other value for money vision correction solution that delivers the convenience, flexibility, and mobility like ForgetSPECS. Just install and forget. Our likely exit strategy will be trade sale. The screen protector market is fragmented, with many major players striving for differentiation, but none of them have vision correction capability. We're already talking to 2 major conglomerates about partnership opportunities, but they're awaiting our next prototypes. ForgetSPECS comes to you with a strong team, a truly innovative product, and a market that is hungry for our solution. At ForgetSPECS, our vision is clear. If you're interested in finding out more about investing or partnering with ForgetSPECS, please click on the link to our deal room or contact me at darryl@forgetspecs.com. Thank you for your time.
Hi, I'm Carol Armitage. I'm the founder of 18-Hour Ultra Dark Chocolate Company. We are a dark chocolate company that is designed to revolutionize the way that everyone looks after their mental health and well-being, predominantly through hot chocolate. But we also make training bars as well for the fitness side of things. We're looking at raising 513k investment. We've also received 2 Great Taste Awards, been featured in Forbes for healthy snacks and drinks. We have also been a finalist for the Great British Food Awards and won Women's Product Awards for healthy snacks and healthy drinks for the last couple of years. So of the 513k that we're looking to raise, 113 of that has already been raised through an investment, Kickstarter, and a separate loan. We have been going for the last year, excuse me, and we've done some amazing partnerships and collaborations so far. We've built up quite a nice little ambassador list full of Team GB, Olympians, world record holders. Now, these people are very keen on what they put in their bodies, so it has to be the right quality, so to promote their fitness lifestyle and mental health. So they are huge advocates of 18-Hour Ultra because for them it really helps boost their mindset. It calms them before they're about to do a big race, but it also helps with their recovery. And then we've also done some amazing collaborations with Virgin Atlantic, Strava, British Red Cross, and Blurt It Out, which is a mental health foundation as well. The reason why 18-Hour Ultra was set up in the first place is because there is a huge global idea that chocolate in general is really bad for us across the board. It's a guilty treat, it's a pleasure, it's an indulgence, it's something that you would have on an ad hoc basis. And if you did have it, you would have to do something in return to burn it off. Usually it's perpetuated from what you see on TV and on the screens. But a lot of the time, the chocolate is either too sugary or has too many unnecessary ingredients. It makes you feel sluggish. And the part of the problem with having dark chocolate, which everybody knows is good for us, is the fact that it's too bitter. So the majority of people then have milk chocolate and white chocolate because they won't sacrifice on the flavour. Now, 18-Hour Ultra is different in the sense of it is an 80% dark chocolate, but we've removed the bitterness due to the way that we've combined the cacao plantations together. It's naturally low in bitterness flavour, so it's rich, smooth, dark, creamy, and we make it into hot chocolate or training bars. It's a premium quality chocolate, so there's very little ingredients in it. All you're getting is just the nutritional benefits from the cacao. It's 70 calories a cup when you make it with hot water, and you make it in small doses. So it's roughly between 20 to 40% of your daily recommended amount. So you can have it every single day, and it boosts your mood, it boosts your body and well-being, and it increases happiness, serotonin levels. It's
reduces anxiety and stress levels. So you could have it first thing in the morning to wake you up, because it doesn't have the caffeine that you would get normally with a coffee, so you don't get the jitters. It brings clarity and focus to mind. Or you could have it in the evening or in the afternoon and carve out some time so you can reset your mind and soothe your soul. So it is very versatile. You can also eat it as well, so and bake with it, and it then works across the whole scale of cooking and baking. The product range that we have is limited to just one type of chocolate, but we've made those into the bags, the bars. We also have a sustainable packaging range, which is the 100-gram bags. The aim with part of the investment is also to drive that across all of our range. So we have sustainable packaging throughout, because we're part of the Horizon, Cacao Horizon plan, which is to do with sustainable farming, cacao, traceability, etc. We want to promote a really positive brand ethos. We also make handmade training bars, which are obviously labour intensive at the moment, but brilliant for fitness and well-being. The competition that we're working against are the mainstream Cadbury's Galaxy options, which are the lower end of quality of chocolate and pricing range. And then we move across to the Hotel Chocolat, Love Cocoa. The main side of the competition, though, is all focused around indulgence, guilty treat, pleasure, etc. Whereas 80 Noir Ultra has firmly planted its feet within the well-being and dark chocolate niche, which that market, especially through the pandemic, with mental health increasing from 1 in 6 people to 1 in 4, finding alternative ways to improve your mental health and just giving ourselves a bit of peace and calm is a huge necessity. So which is why 80 Noir Ultra is perfect. And so with the market being 1.5 trillion for well-being and dark chocolate being 52.4, we're looking to absorb 30% of that market in the next 10 years. Now, as I said, with the pandemic, online shopping has increased by 46%. So we do a lot of online shopping, and we're looking to grow into sort of wholesales. So hotels, farm shops, British Airways, Virgin Atlantic, etc. So we can go more global and spread the word far and wide. The team that we have at the moment is predominantly just myself and a virtual assistant, and the majority of the work is outsourced. So the graphics, the packaging, the marketing side of things is all outsourced. With the investment that we're looking to bring in, as I said before, 50k of that has been secured. We're looking to raise 400k with an equity share of up to 25%. If it's UK based, then it would have the EIS assurance, and then we've got a pre-money valuation of 1.35. Now that money is designed to bring about a huge change to the company. So it goes from small business to onto the next platform. We would be looking at putting a lot of the money into marketing, PR and sales to increase the audience range and the brand awareness, to make it focusing on UK to begin with, but then going more to Europe and to worldwide. And then obviously making sure that we can have strategic partnerships to move the production from the house into a warehouse unit, but working with partnerships at the moment so we can get the shipping, fulfilling the packing all in one place. And then looking at increasing the product range so we can have more versatility and more scope, so we can increase the sales that way. So thank you very much for listening.
Unbelievable array of companies.
Agreed.
8 investment opportunities, raising capital now. So if any of those piqued your interest, you have the options to go into Brella, conduct a one-on-one meeting with those founders, actually reach out to them and conduct a one-on-one meeting. But also you will have access to all their deal rooms as well. So if there is a particular investment opportunity that you are interested in, you can request access to their crisp deal room. And in that deal room, you can conduct further due diligence, follow the milestones of those companies, see their frequently asked questions, and engage in further conversations with those founders as well. Now, coming up, we have the STEM Campfire. And this campfire is really important because it has a combination of both STEM investors and STEM founders discussing the communication gap between the two sides of the ecosystem, which is really important.
I agree. And it's something that we see quite often because, as I said, part of our role is that how do we help companies communicate their opportunity? And we know in dealing with a lot of more technical business, obviously sometimes they want to talk specifically about the product and some of their technical innovations. And when that's taking place for investors, it's sometimes difficult to understand what the real opportunity is with the company. So in bringing together this campfire, we want to bring the two different sides together and give you that awareness and give you perspective of what each party is thinking. And then that way, I said, for me, it's always about how do you form your own thesis and how do you form your own understanding of how you want to approach investments.
Absolutely. So we've got, I think it's Main Sequence Ventures, which is the leading deep tech VC in Australia. We have two commercialization experts as well. And we have Scott Graham from Rex Energy, which is actually a client of Wholesale Investor as well. So enjoy the campfire. And again, each of these panelists will be contactable via Brella. That's part of the event function. And we'll see you right after.
Well, hello everyone and welcome to our STEM Campfire. My name is Liz Boyce. I'm a corporate partner at the law firm Piper Alderman. So my day job includes working with companies that are growing and raising capital and with investors, and I co-lead our life sciences group. So I've got particular knowledge of the life sciences part of the STEM universe. As we meet together today, we're gathering from a variety of places. I'm joining you from the traditional lands of the Wongal people of the Eora Nation, and so I pay my respects to elders past, present and emerging, and to any elders in our audience today. In a moment, I'm going to get our team to introduce themselves. Let me just at least introduce them by name and then give you some opening remarks. So we're very happy to be joined today by Mike Nichols, partner at Main Sequence Ventures, by Natalie Chapman, commercialization and MD at GemMaker, and Scott Graham, the CEO of Rex Energy. So we're gathering around a STEM campfire today. So by STEM, we're talking about science, technology, engineering, maths. In a business context, we might use the label deep tech. So a business that's founded on scientific, technological or engineering innovation, solving big problems. It's often got a very long research and development pathway and needs quite extensive investment to get to the point of bringing a product successfully to market. And in our audience today, we understand that we have a mix of founders and people working within early stage companies. And so our hope for you today is that we're going to help you to optimize your plans for commercialization and to communicate more effectively with investors when you're seeking that all-important capital. We're also joined by a number of investors, and some of you may be very well experienced and already investing in the deep tech sector. Others of you might be considering it and perhaps it looks a bit too complicated or too slow to bring a successful result. And so our aim for you is to help you understand some of the dynamics of that sector so you know what to expect as you make those investment decisions. So let me turn to each of our panel just to give us a few opening remarks about what they do and how that speaks to those themes for founders, investors. So can I start with you, Mike?
Thank you very much, Liz. Good to see you. And I also pay my respects to elders past and present. I'm Mike Nichols. I'm one of the partners at Main Sequence Ventures. Main Sequence Ventures was originally formed out of the federal government's National Innovation and Science Agenda in 2015, officially launched in 2017. We're basically Australia's deep tech venture capital firm. So we invest in research that's coming out of universities or publicly funded research groups, or startups that have relationships with those groups. We started with a $250 million fund, of which was seeded by CSIRO and government. We went and raised a bunch of public money in that. We're on to our second fund now. I think we've got roughly 500 million under management and invested in something like 35 companies. My areas of sort of expertise are around the health space, semiconductors, energy and renewable energy and decarbonisation scenarios, with a bit of interest in AI and robotics as well. Does that sort of give you what you need to know?
That's very helpful. Thanks, Mike. So obviously a lot of experience working with quite a broad spread of companies across that deep tech sector.
A lot of different themes, but primarily all scientific and engineering.
Yeah, lovely. And Natalie, may I turn to you? Please tell us a little bit about yourself and some facts of interest for our audience.
Sure. So I'm Natalie Chapman. I'm the Managing Director of GemMaker, which is a national commercialisation agency that specialises in deep tech. And we've been building companies out of research organisations for more than 20 years. In terms of the deep tech, it's very much a slow burn. And so I guess it takes many, many years to happen, but we're really excited about trying to accelerate the growth of these new industries in Australia. So we have companies such as CSL, Cochlear, ResMed, etc. We want the next generation of those sort of organisations in Australia.
Absolutely. They all started small and from little things, big things grow, but it's a long journey, as you say. And finally, Scott, can I turn to you? Can you tell us a little bit about yourself?
Certainly. My name is Scott Graham, founder and chief executive of Rex Energy. I previously was a civilian contractor to the United States military in the energy sector. Spent about 9 years in that role, moved to Australia, founded this excellent corporation, and we are very much a STEM company in every possible aspect, developing new renewable energy technologies where they have a blue ocean space and integrating them into multi-tenant buildings, multi-tenant sites. What we're trying to do here is essentially develop 24-hour renewable energy power plants for people in multi-tenant buildings. And we take our investors and our suppliers on that journey with us, and it's a very exciting process. So that's a little bit about who I am, what I'm up to.
Thank you very much. So it's interesting to note that there's the many different ways in which someone might start out at an early stage deep tech company. It could come out of a research institute. It could come from being an established player in industry, then branching out, seeing a gap, a bit of blue ocean. And so when we think about people who are in an early stage, they're a technical founder, they're contemplating this very long, slow burn, as Natalie said. What are some of the things that technical founders can do to balance that need for time to progress the R&D with the importance of actually getting to a point where you've got something to sell and someone who wants to buy it? Who'd like to take that on to start us off?
I'm happy to do it
Go,
every day.
Scott.
Yeah. So, look, for me, it is absolutely critical to take your suppliers and your investors on that journey with you. When we meet with a supplier for the first time, we come up with a great idea and we say, okay, what suppliers, 20, 30, 50 different suppliers for different components. So we talk to them about what the product is. We sell the dream and they get very excited about it, just as excited as we do. So the suppliers become part of our team. And we talk to our suppliers about, hey, today I'm going to order one, but in 9 months or 12 months, I'm going to need to order 50 and then 100 and then 1,000. And are you able to supply those? And if you are, what's your timelines look like? And what's the cost look like? What kind of cost break? So we work on negotiations at the very beginning, at the very start. So we work on commercialization through the process of research and development. And our suppliers are happy to go on that journey with us. And the other thing that we, companies like ours have to do is you must allow time in your budgets. And you've got to, again, that's part of taking the investors on that journey. Investors, I'm going to get a product and we're going to build it and it's going to work. That's wonderful. But then we've got to work with the regulators to make sure that now that it's done and they can look at it and it's tangible, we've got to get it through that regulatory process as well. So there's a few factors involved, but taking everyone on the journey is very important.
Yeah, that collaboration piece is incredibly important. Natalie, maybe you can comment a bit more on collaborations. I know that's something that you work on with some of your early stage companies.
Yeah, sure. So whenever you're starting up and you're the technical founder, understanding that you need to work with lots of other groups along the way and finding out which groups to work with are extremely important. Understanding that the technology that you have may be absolutely awesome, but if you don't actually have the commercial aspect happening at the same time, as Scott's mentioned, which is important, you're really missing, you're going to miss the boat. As is, finding out network-wise in terms of who's going to help you with your R&D tax, that you have a good commercialisation lawyer in place, that if you're doing additional R&D, where are you going to do that R&D? If you're building a prototype, who are you going to get to help you with the prototype? So in the initial stages, it's not just, I'm the one-man band, I've developed the technology, and therefore, because it is so awesome, it's just going to rocket off and sell itself. Number of times I've been told that and then said, well, why is it that you've actually come to chat to us? The commercialisation aspect is really important, and thinking about it and not just going, hey, we'll chuck in a marketing intern and they can look after the commercial aspect isn't really going to help get your product to market. So, yeah, finding out early who to connect in with and take as much advice on board as possible and look for experts to be helping you, not thinking, well, the expertise is the technical and everything else is really, anybody can do it, is a really important lesson.
Thanks, Natalie. Mike, I can see you're about to jump in, so please do.
I have to agree with Natalie about the the commercial aspects. You can't just put the intern on it, that's for sure. It seems like, you need, in my mind, the engineering effort or the scientific effort is the first half, and many people can do that, but not many people can do the second half to get the thing to market. We meet a lot of very early stage researchers that have some really interesting technology, but they can't talk about it in ways that allow them to convince investors or management of potential customers to get on board. So they'll be talking super deep on the tech, but they're not really thinking much about the business. And it takes some time to get them to the point where they're able to actually have a fluid conversation with an investor, for example, around why you want to invest in this. It is a great technology, but why is it worth investing in? And one comes to mind. I've just spent 3 months working one really early super engineer, super technical geek, but the business side was just not quite there yet. And so it took 3 months to get that presentation to the point where when it finally came to a set of investors, it's like, oh, right, we get that now. But 3 months ago, it was just, a complete technobabble, but not really hitting home on the key business reasons. So that takes quite a lot to get them. And we've done this with, literally hundreds of researchers through the CSIRO ON program, where you've really got to start with, you've got fantastic tech, but we've got to help you take it. And you're going to have different audiences and different messages you have to give those audiences. So the message for the investor is going to be very different to the message for your potential staff, which is going to be very different to the message to the technical staff at the customer or prospective customer, or the management at the prospective customer. They're all different messages that have to be delivered well. But yeah, to your point, Natalie, the sales bit is the last half, and that's the hard bit. Well, not the hard bit, it's just the bit they don't think about.
Yeah, well, from an investor point of view, you're putting money in and the hope that you'll get it back at some point. And for you to get it back, someone needs to be buying the stuff at the other end of the journey. So very much about beginning with the end in mind. We might keep talking about communication because we've sort of got onto a communication theme. And so let's talk a bit more about communicating, particularly with investors and honing that message. So maybe, Scott, if you've got some comments in terms of, conversations you've had or you've been party to in terms of that investor conversation.
Absolutely. So when it comes to communicating, we have extremely complex products, right? It's a combination of software and hardware, and even some of the greatest engineers from an electrical perspective and a renewable energy perspective, it's mind-boggling to them. So it becomes a bit difficult to communicate the technical aspect. And I find that investors, they want to know what the end result of the technology is, not all the bibs and bobs and all the wires and the cables and all the rest that comes along with whatever it is you're building. So for us, what I've done with our marketing team is I've said, hey, let's whittle this down to 3 bullet points that are results-focused bullet points, right? So, what does the technology achieve? How does the customer benefit? And how does it make money? Because ultimately, you've got to have a plan to sell the product into the market. You have to have a total addressable market. If you haven't properly identified that and your investors don't understand what that is, they really don't know what they're investing in. But investors are investing in something that's going to generate a return, and they want to know that it's going to work. But really, that is up to the founder, and that is up to the people that surround the founder to sell the investor on trust. And at the end of the day, if the investor does not trust that you are going to be able to deliver the product, they certainly aren't going to be able to trust that you're going to be able to sell the product. Early on, we established the investor's knowledge as it relates specifically to what the product is going to achieve. And then after the investor's engaged, we then take them on the journey of what the technology looks like and how it works. But initially, focusing on the technology is not going to achieve good results in any possible capacity.
Definitely. So a great theme of simplification there. And Natalie, I know that from your bio that you have both qualifications in science and in marketing. So it seems like it's a perfect mix. Maybe you can elaborate on some of the tips for, simplifying the complex and speaking intelligently with investors.
Sure. So as a chemist, I've got my own technical language. And whenever I'm talking to chemists, we can shorthand everything, periodic table, that sort of thing. And then when you're talking to non-chemists, then you've got to change the way that you're explaining things. And so what I find is if you imagine that you're talking with a 12-year-old, if you're talking about your technology and you've got to explain to them how this works or what it does or why it does it, then you really start breaking down the language. Now, if it's a bit difficult to go to I'm talking to a 12-year-old, don't happen to have one around handy or, that sort of thing. One good thing to do, particularly when it's written communication, is actually copy and paste the text into something called a gunning fog index. So if they type that up on the web, gunning, Gunning, then fog, F-O-G, index, it's a readability test. And basically, it'll come back out with a number. And the number will actually tell you how many years of formal education you need to be able to, that you've had to be able to understand on the first reading of what you've got, right? And so ideally, you don't want it to be higher than 12, which is year 12 education. If you're going for more of a general audience, then you don't want it to be above 8, which is what you find, I guess, the common newspapers are like in terms of understanding. So that's a really simple thing for all, technical, engineering, science people. Grab your text, chuck it into there and see what it comes back with, just for a reality check for you. And then you need to start removing all of the really big jargony words and shorten the sentences, right? So that's really helpful. Because, we've got things like, we've invented a novel polypropylene film that'll blah, 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 blah. And it's a case of, no, it's actually a shrink wrap that goes on your roof, stays on in the wind and keeps out the leaks. Pretty darn simple compared to, the original technical focus of what it is and how it works and all the rest of it. So, they're really just simple type of communication things. But if someone implements them immediately, they'll really start to get an idea of how far they're aiming and where they should be aiming.
I like that, because when you're in your own universe, that what you're used to makes sense to you, but as soon as you step outside, so I like that gunning fog, a scientific approach to simplification. So Mike, let me turn to you. I mean, you are a regular investor, so I guess you've probably seen quite a spectrum of pitches and explanations. What are some of the things that make your job easier, and what are some of the things that maybe drive you nuts?
Geez. Look, I think, just to go back to a couple of those points back there, I mean, engineers talk about, and scientists talk about specifications and technology, but customers actually buy benefits. And so it's really hard to get them to actually think in that terms. And sometimes, because we do deal with such a wide variety of scientific engineering fields, not every person in our team has the same amount of expertise across all the different zones. So in some cases, you do have to go back to that. Okay, tell me the base level about why this is great, why we need to worry about not the specification, but the benefit. I think, to add to your point, Natalie, the Hemingway app is one that I use all the time that I think uses something either similar to your index or the Fleishman index, I think it is. That's quite good as well, and gives you a score, which is great. So, one thing that's one thing is whether they can communicate the benefits to the investor, to the customer, the likelihood that they're going to get that. I think other things that sort of drive me maybe a little bit nuts is quite often you get people in the STEM space that try to convince you that there's science when there's actually not real science there, if that makes sense, or there's pseudoscience, or maybe there is wishful thinking science. So we'd really love to be able to do this. This is what we're aiming to do, but maybe there's not so much science underneath that, or it's more we would like to be able to do it, not we can do it. So trying to work out what's real there and what's not real there is a little bit of a challenge. I think people that are not self-aware about what the risks are. In some of these things, you do have science risk, you do have engineering risk. The three things that will trip you up in life in venture capital every time is physics, chemistry, and biology. Those three things will screw you up every single time. And if you think you've got a better solution to some of those, they'll bring you back into line sooner or later. And so, you have to be, what would you say? I think one thing that I find pleasantly refreshing is when somebody is realistic about assessing the risks of any given science or engineering challenge, and that they're able to have a conversation with you about those risks versus trying to gloss over them or minimize them or mitigate them. And so I find that's refreshingly good. The opposite is it's really frustrating when you don't get that. I think that's probably enough on that side. Just remember, physics, biology, chemistry, they screw you over every time.
Thank you. We might, while we're on the communication theme, pivot to communicating with your customer, or the person that you hope will one day be your customer. One of the challenges for a highly technical business is, I think, Natalie, you alluded to it, people say, well, this is such a great product, everyone's going to want it. But that may or may not be the case. So I might get you and then Scott to comment on how you actually engage with who you hope will be your customer to work out, are they really going to be your customer? And if so, are you providing something that they're going to want?
I guess market research is key to this in the first instance. And also it goes back to the technology and why you developed it in the first place. Because if you've developed a technology because you're really interested in some space and you're heading down this pathway and you haven't actually checked it with anyone in terms of whether it's actually going to meet a market need, then you're basically just chucking a lot of money down a particular avenue, and then, maybe it'll get commercial later. So ideally, you've been speaking to people in industry, you've worked out that there's this problem, you're working on a solution for it, and as you're working on the solution, you're sort of testing it with people, obviously when it's in a sort of a protectable state to begin with, but that you're actually getting feedback into it about how big a problem it is, what sort of things they've tried in the past. Really, the more knowledge that you can glean all the way through the development of your product will make it easier to sell at the end of the day, because you found the pressure points, you found what they'll pay for, you found out what else is out there in the market and how different yours is. And so all of those lead you down to actually, when you create the marketing material, as Mike was not suggesting, but saying, it's about the benefits to that client at the end of the day. And you're picking up in your market research and you're constant talking with them about what it is that they want and how it's going to help them. And so therefore, the best marketing is actually putting what the customer needs into their words and putting it back at them, so that when they hear them, they think, yeah, that's exactly my problem. That's exactly what I'm going through. Absolutely, I really want that because that's going to help me. And that's where the marketing comes from, and the good communication. So, yeah, I take them down that journey, and that's how it gets out there and it works.
Lovely. Scott, I mean, you've got a leading piece of technology that you're working on. How do you have those conversations with the potential customers to convince or to work out that there's a fit?
Well, this is a really great conversation, first of all, because this is the foundation of any company, any product that's being developed, and really great contributions there, folks. For our company, what we do is we come up with a great idea. Now we'll all sit around, or all be laying in bed at night, or I don't know, on the golf course, and I'll say, oh my God, I've got another idea, right? And I'm super excited about it. I come back to the office, I tell everybody about it, I get everybody enthusiastic, and then we go, yeah, but are people going to buy it? We don't know, right? So we've got 3 major products in development in the renewable energy space, and it's extremely exciting, and we're excited about it, but we don't know if the end consumer is going to purchase them. So what I do is I stop and I say, okay, we're all very excited about this. Let's go talk to people. Let's go talk to customers. Let's go talk to them before we talk to investors about the research and development that we'd like to start taking on. Let's have a conversation with the actual customers who would purchase this product, this concept of a product. So what we'll do is we develop a kind of a 1 or 2 page document, and we'll send our salespeople out, and I'll go out and I'll meet with people in the industry. And we actually have these conversations. If we can achieve this for you with this product, what would you do differently? What price point, where do you see value here? If we can make this much money a day for your company with this product, how do you see this fitting in? And so we have these conversations, we identify if it's marketable right up front. And then we begin the process of speaking to those suppliers, figuring out if we can meet those price points, because everything in this world that costs money or is going to make money has to have some form of return on investment. You have to figure out the threshold that is acceptable in the marketplace. And if you're too far out, then it's not going to be a viable product, no matter how great it is. If people have great products, and you all know this, there's some great minds out there, they come up with a great idea, but then it just doesn't fit into the marketplace because it does not get a return on investment that's acceptable or tolerable. Yeah.
All right. Well, as we continue to think about that communication piece, it can be challenging if you're a highly technical person to be able to communicate confidently and clearly. So I'm curious for those in our audience, how can you hone your communication skills? Because not all of us feel that we're born as communicators. Mike, have you got some thoughts on, where people, if they don't feel they're good at it, how can they get better?
Yeah, look, I think somebody mentioned jargon before. De-jargonizing things is probably a good start there. But look, what you're trying to do is tell a story, and you're trying to take everybody on a journey with you. So, where's the end point of the story? What's the magnificent future there? What are the paths along the way? What's your first step? Why are you the right person to take that journey? So that's sort of important. I want to make some comments about some of those questions, some of those points before. When we think about the sort of different markets, there's a couple of markets where it's obvious there is a need. If you can cure stage 4 metastatic cancer right now, there's guaranteed a need for that. But there might be a couple of channel risks around how you get that product into the market. But it's fairly obvious that there's an unsatisfied need there because people are dying every day from stage 4 metastatic cancer. So we know that's an obvious winner if you can do it. It's very technically difficult to do, and you might have some challenges in getting that product to market and what that process looks like, but that's an obvious one. Then you've got other markets which are emerging markets. So we have a reason to believe that the market will be there around about the time that we're developing this technology and get this technology to market. These are the reasons why we believe this, and here are the warning signs of the changes, the things that are happening. And so those things are less certain from a market perspective. You might have the timing right or wrong. There might be, as I said before, some physics, chemistry, or biology problems that get in your way, but you feel there's going to be a market there. So I think that there's a couple of different things there. I mean, I would prefer to take the science risk without the market risk most times, but then there's always, quite often really big returns come from getting into or even making markets early. So, I don't know whether that helps you or not. Probably a bit deviated off your question, but I think the ideal founder in that scenario has been through and experienced pain that their problem is solving. And so they've either worked in an environment where they had to solve this problem or had to try to solve this problem. And their research sort of is very much influenced by that situation.
So there's a genuine fire in the belly because it's a problem that means something to them.
Yeah, they've been through it. They understand the issue. They've had to solve for the problem before in one way or another. They have pretty good insight into the customer. I mean, it doesn't mean they shouldn't speak to customers. They should, but it's not like they've said, right, I'm 21, I've just come out of university, I'm going to go and solve a problem for a farmer. It's like, have you been near a farm recently? No, not really. Whereas somebody that may have actually been a farmer, I'll give you an example. Guy up in Queensland, Andrew Bates, running a company called Swarm Farm, building autonomous robotic tractors that drive themselves. He is a farmer. He owns thousands of acres of land. He had this problem. He got together with a bunch of university robotics researchers to build a solution to his problem. That's sort of interesting.
So this is, I think, leading us to a bit of a conversation. I think the phrase total addressable market's been mentioned at least once, and it's just sort of, I guess, looking at the big picture. We're talking to individual customers, but then there's the big picture of how many people are likely to need or want or be in a position to afford this product. So let's talk a bit about total addressable market, because that can be a bit of a stumbling block from a founder point of view and an investor point of view. Maybe, Natalie, are you happy to sort of kick us off in that direction? How does someone think about and estimate the total addressable market realistically?
Sure. I guess I'll start with, on the marketing side, it's quite often an inventor, researcher will come to me and say, our technology will help everybody. It can be used for everything, right? Because we're trying to define what the marketing strategy is going to be and who the customers are and all the rest of it. And when I hear it'll do it for everybody, as in like a platform technology and it can go across every sector and all the rest of it, I like to try and break things down a bit further and say you've only got a certain amount of money. And for that certain amount of money, you're going to be able to try and reach who's going to buy your product, right? And not run out of money as you're trying to do that. So if you think about Australia has 25 million people, right? And 500 of those people are the decision makers that are going to be able to, be interested and buy. Then, and those 500 people, they could be in very large corporations or buying on behalf of hospitals or whatever. It's not, 500 cute little individuals all working out of their lockdown houses or something necessarily, or maybe they are. But if you're trying to target 500 people out of a 25 million possibility in Australia, then how do you do that with a budget of, 50,000 or 100,000, right? So that's when they need to be able to look at exactly what this market looks like, who that buyer looks like, why they're buying, where they go to get their information, what type of industry. You need to start nutting down a lot more targeted to be able to define who or what this buyer is and why they're buying and how to get to them with the very, very limited funds that you have. So I know you've asked about addressable market, haven't gotten into that yet, but I find this is the first bit that they have to get over, because otherwise they run out of money before they've done anything, because they're so busy putting out messages here, there and everywhere and all the rest of it. So a targeted approach. I also find that when companies are pitching, that they'll use an IBIS report or one of those other large reports where they say the market is like this, right, for this industry, right? And this number that they're quoting has absolutely nothing to do with this tiny little section of what's actually doable, where you get into the addressable market as opposed to the, fantastic, this number looks awesome because it's in the billions, and therefore I will get 0.5% of the billions, and so therefore my revenue will be this. So that's all I'm going to get into on addressable markets, because I'm sure Mike and Scott have lots better info and angles on it. But there's some of the things that I see where I just kind of,
Yeah, so getting focused on who is your customer rather than we can help everyone.
Yes.
And Mike, I might turn to you and then to Scott and to sort of keep building out on this, how you work out and define your market.
Yeah, look, I think, the example I use, which sort of puts some numbers on that discussion, if we look at semiconductors, for example, semiconductors are roughly $450 billion US per annum globally. So if somebody comes to you and says it's a $450 billion a year business, you're going to say, well, wait a minute, that's the gazillion different types of semiconductor. What are you making? Well, I'm making a wireless chip. It's like, okay, well, about 60 billion of that is RF related wireless products, but around 20 billion of that are Wi-Fi related products. And then you're making a particular version of Wi-Fi, which is probably going to be about 3 or 4 billion. So it's actually not a $450 billion a year market. It's probably a $2 billion market, but I don't really worry that much about the precision of that number. What I'm trying to understand is whether it's a believably large number, and whether there is, whether we are talking about the same thing, whether it is, the product that's being built, is that going to be able to go into a believably large market and be successful? Whether it's 2 billion or 20 billion, okay, 10 difference, that might be a bit, times 10 might be a bit big, but as long as it's in the multiple billions and it's not hotly contested, I'm okay with that. So lots of people quote you these massive market numbers, but I don't believe many of them. And you can go and find 20 different versions of them by Googling pretty quickly.
Scott, how about you when you're thinking about market, whether it's for your own products or working with other companies, how do you sort of define that and hone that to be clear about where the market is?
We research. We spend a lot of time and we expend a lot of effort in research. Mm-hmm. And when we're researching, we're making darn sure that it's a reliable source. And so we then take that data and we beat it down into what we believe is a true total addressable market. And that it is defining your TAM is all about research. Every bit of it. You have got to take the time. You've got to put forth the effort. And this is a team effort for us. So it's not just one person in the office that does the research. Everybody kind of digs in and gets involved. It's an education process for our team and our company as well. But it's just research and accurate research. We build a spreadsheet that we all work off of, and we provide our contributions to it, and we define what that TAM for whatever specific product is that we're developing. Do you mind, Liz, if I take you back to a question that you asked earlier, and this was about honing your communication skills?
Sure, please do.
I'd like to just touch on that real quick, because this is very personal to me. I was a horrible communicator. Atrocious. And I would get so nervous before I went into any meeting of any kind. And so what I did is I said, I've just got to start communicating, right? I might not be a good communicator, but I need to start communicating. So I started reading and I started communicating. I started putting myself in front of people. I'd asked to do a presentation just to do it. I don't want anything from you. I just want you to critique my skills and my communication skills. Could you do that for me? Yes. And I would face my fears, and I would get so stressed out. This was about 10, 15 years ago. I would get so stressed out during a meeting. I'd get in my car and I'd drive my car down the road and I would fall asleep because I was so nervous just to go into that meeting and communicate a little bit. But now I've come a long way since then, and I'm quite an effective communicator. So I'd just like to encourage, just simplify your message, and just start communicating. Read books about communication. How to Win Friends and Influence People is an excellent book by Dale Carnegie. If you haven't read it, gosh, you've really got to read it. If you're in business in general. And so I just wanted to touch on that, Liz. I'm sorry for interrupting the flow of your.
No, we are controllers of our own destiny, Scott. So we can move our campfire wherever we choose. Thank you.
Sure.
One of the things that we've been asked to comment on is areas in the deep tech universe that seem maybe on the verge of experiencing mass market adoption. Ones that are maybe got a ways to go, so be prepared for a long ride. We're not trying to give investment advice here, I hasten to add, but just to help, what are we seeing that's interesting in the deep tech landscape? Or it may be something that's perhaps got a smaller market, but it's quite a powerful, could make a powerful change and therefore be worth considering. Mike, do you feel game to kick us off on that one?
Yeah, sure. Look, I think that there's always a range of different interesting areas, but I think things that seem to be on the boil a lot at the moment, lots of interest, but also lots of scientific progress, should I say. Synthetic biology is looking to be a big one around making all sorts of new materials without sort of consuming non-renewable resources. So that's synthetically changing a yeast or a bacteria to allow it to produce a particular compound protein, whatever it might be, that is used instead of something else. So, for example, it could be making cultured meat, it could be making replacement leather, it could be making a pharmaceutical, it could be making a different type of material or chemical that has been made using a non-renewable process in the past. It could be making hydrogen in some cases. There's a group at Macquarie University that have got a bacteria that when you feed it sugar, it makes hydrogen. Now, that's still really early. It's probably not quite commercial, but it's not commercial yet, but it could be at one point. So synthetic biology is pretty interesting. I think decarbonisation around energy, around recyclables, around renewables, storage is super important. How do we store renewable energy? I mean, there's other areas that are a bit maybe fuzzier about when they come into fruition. Quantum computing, for example, is very interesting. I think that's one of those markets where it doesn't 100% exist yet, but we know that the world today has an insatiable appetite for computing power. We know that we are maxing computing power out everywhere, and we want more of it with less energy to produce it. So if quantum computing can develop there's probably an interesting pathway there. Yeah. I'll let the others jump in on there.
And I want to make an observation at this point, because one of the features of investing in this sector is it's not simply about getting a return, which obviously an investor needs, but also often the sense of, well, I'm investing to make a difference, to bring into life a product that the world needs, whether it's making a difference in energy or renewable resources or health. And so that alignment of the passion for the particular problem that you're solving, I think is quite an important thing for an investor to think about, particularly if you're going to be on a long journey. So I might pass to Natalie and then to Scott in terms of some areas that you think are, interesting, hot at the moment, or potentially emerging.
We tend to get involved with technologies that we believe are going to help people and the planet effectively. So that's a big driver for us. Our company is not all about the money, and frequently we'll do pro bono type work in areas that we want to help move because they don't have the resources themselves yet to move, but it's of personal interest to myself and my team. So, particularly in carbon removal, if you like, from the atmosphere. So we're involved in something in that sense at the moment, which will pull carbon dioxide out of industries, turn it into other materials that are of use. So I can see a lot of that now that we've got, I guess, we are getting a lot more focus on that globally, more so outside of Australia, unfortunately, rather than in it. But it would be nice to see, I guess, some of the focus like there's lots of industry in Australia, I think, that are in renewables. We want to do something about climate change. We want to do carbon emissions. And so I can see that all building. And I'm really excited about that space and us being in it. Same with food, as Mike was suggesting, in terms of different ways of not eating animals necessarily, and alternatives for healthy living, but also the fact that the planet's changing, our environment's changing, and resources are limited. So looking at other ways that we can address that. Also personalised medicine, instead of, a bulk shove of this into everybody is going to work. It's not working so much. So personalised medicine is becoming a much bigger thing. And also batteries, in terms of when we're talking about renewables or electric vehicles or drones, none of them work so well unless they've got a battery as a backup. And so life of batteries and how to extend that, and then also recycle the materials in batteries. So that circular economy people are thinking more about as well. And I'll pass to Scott.
Scott, what are you saying?
I concur with your assessments, both of you, and you're spot on. The clean tech, renewable sector is going absolutely insane. Now, EV tech as well is also going to be massive. So everyone knows. I think all of the countries of the world are going to start moving into the EV sector. I think the United States, Australia, England's already, I think, said that all of their vehicles need to be EV by the year 2030. Don't quote me on that, but I think that's correct. But the for us, another thing that's really big is communications, because means of communication, low orbit satellites and whatnot. What Rex Energy is in the process of doing, or I think tomorrow will likely have approval on building one of the first large-scale renewable energy generation plants for the country of Papua New Guinea in the middle of nowhere. And in order to do that, we have to have good communications because everything is cloud connected with us, right? And so this third world investment, by the way, is going to continue to grow, and the world is kind of figuring out that you can't burn diesel generators and thousands of diesel generators constantly in Papua New Guinea, and then or in Samoa or wherever it may be. But then in our Western civilization countries, everybody's got to have solar panels, right? So I think that what's happening is you're seeing Western countries begin the process of investing into the likes of Papua New Guinea, the Samoan Islands, and Indonesia even, in order to help them catch up to the rest of the world, because these are the big polluters. It's the same thing with the ocean, right? You can clean up the ocean, but unless you solve the problem, and so you're going to see investment into these areas. And I think that's kind of what everyone's been saying. Definitely energy storage, as long as it's thought through and it's an effective product that's mobile, lightweight, and has longevity. Lithium doesn't have longevity. I'm not a fan of lithium. We do not use lithium in any of our products in any energy storage. But the way the world is moving right now, especially in this energy sector, you see it, you hear it in the news, you see it in the news. It's a daily discussion, is that our legacy energy transmission and distribution and production systems can no longer cope with what's happening. We're adding the EV load. Everybody, I have an iPad, I have a little tablet that's like a paper tablet that I use for notes, and I have a laptop, right? And we're charging and I have a phone. So we're charging all these devices. We're now going to be charging our cars. We're shutting down coal-fired power plants, which I understand. In order to do that, you're going to see small generators at multi-tenant sites, large regions of the city. You're going to see small generators commingling with the legacy generation systems that have been around for 100 or so years. And I think that area of the world and that area of business is being invested in heavily. And it's being invested in heavily from America, from the United Kingdom, from India. We have 9 families that exist in the Middle East who are looking at investing into our company, and they came out of nowhere because they recognize that oil is dying and they've got to diversify, how they make their money, right? And the future is clean tech. That's a very long-winded answer. I'm so sorry.
Can I jump in there for a sec? So
Please do, Mark.
what do you see there from an energy perspective? You mentioned you don't use lithium. What's your solution? What is the tech?
That is such a good question. So right now, what we've tried vanadium flow, and I really, it's an interesting product. The reason I really liked vanadium flow is one of our objectives is we want to invest in Australia. We want to buy Australian products. We want to integrate that into our product. We want to make sure that the bulk of everything that we're building here in Australia comes from Australia. This country is an amazing place, right? So one of the largest vanadium deposits in the entire world, I think the largest, is in North Queensland, right? So that's why I looked at vanadium flow initially. It's not a bad product. It has its good applications. It actually is also quite sturdy under fairly high temperature, which is great for Queensland. We're in the Gold Coast here. It's pretty hot here. But aside of that, I see ultracapacitors and supercapacitors being incredible methods to store energy. They have the cycles that the world needs, and they also have obviously the longevity, right? And they're quite frankly benign. Lithium, as you know, lithium can catch fire, and once it catches fire, God love you, you're not going to put it out. So I'm not a huge fan of lithium, especially when I'm integrating it into buildings where people live. You've got 50 tenants in a building, or you've got big places of business where there's a shopping center. I don't want to integrate lithium energy storage there because I feel, if something were to happen, I've got to live with that, right? And I want to make sure that my product is as safe as possible. So I think you're going to see energy storage move on the marketplace that's cost effective, which your capacitors are, but are also, they don't have that source of potential danger that lithium does. Yeah.
So, but I mean, I'll say to you that lithium.
Mike and Scott, I'm going to exercise moderator's
Okay.
privileges here. I mean, we could have a really interesting discussion about just this question, and I've let it go on because you guys are both passionate, and also it's a great illustration that all of these new technologies are solving quite complex problems, and you may solve one problem and create another one. So you need that research, that planning, that collaboration with multiple sources of expertise. So Mike, if there's anything you're dying to say, you may say it, but then we're going to, and I'm going to give Natalie a chance to weigh in on the energy storage point
Natalie,
as well.
You go for it, Natalie.
Look, all I can say is when you're talking about, you're worried about things catching fire.
Yeah.
Hydrogen storage.
Oh, that's extremely tight. Agreed.
What
Concur
about
with your
gas?
assessment. Yeah.
What about gas? We've had gas in our buildings for 150 years.
This is true.
It actually does catch fire. We've had petrol in our cars forever. It catches fire too. The lithium fire thing is pretty, let's just say there's gazillions of them, billions of them around the world. They're not catching fire very often. It's pretty unusual. So it's a point. In fact, the bigger thing against lithium is the fact that it's actually pretty hard to extract. There's not enough of it for future demands, and I suspect we'll see a lithium and other battery metals spike at some time in the near future. And they're actually pretty dirty in some ways because the recycling of those in 10 to 20 years' time is going to be a bit of a problem, but it's still better than coal, and it's still better than gas, and still solve that problem. I think the problem with batteries we've got at the moment is, one, we've got a material shortage that's already happening and coming. But secondly, they're very peaky sort of things. They do well for 2-3 hours at a time, but they don't do the sunset to sunrise problem well. The only way to scale them is to go and add another one or another one or another one. Something like hydrogen gives you an ability to scale out that by adding more storage, which doesn't massively increase the overall balance of plant. And so that's one aspect, but that's still got some technical development to go as well. We're still, in my mind, we've still got a couple of challenges to solve before we can switch the coal plants off. And that sunset to sunrise, we have to solve it. And the thing that's getting in the way is materials and chemistry. Physics and chemistry, they'll kill you every time. And that's what's happening with batteries.
Yeah.
So this has been a lovely mini case study for our audience. Whether you're a founder thinking through your strategy, there's always extra angles to be thinking about it. You're not just solving one problem, you may be solving multiple problems. And for investors, these are maybe the questions that you're going to be asking the founders. Well, what are the implications of this? Is this renewable? Is this creating a different problem? Is this medical product going to create side effects? So this has been a great illustration, team. So I'm very grateful to you. We're going to wrap this up fairly soon. I just want to open it up again in terms of things that an investor's looking for that maybe founders overlook. We've talked a little bit about market. We've talked a little bit about focus. Maybe there's a question around team. We haven't talked much about team experience, a bit more about competitive advantage. So I'll start with Natalie and then go to Scott and then Mike. So some things that perhaps people overlook that are important to investors.
Well, you're right in terms of team. So the team is really, really important. It's not just about the technology, it's not just about the market, but it's also about the team. And in some cases, the technical founder is great at being the CEO. And in many cases, they're also better having a co-founder or a commercial CEO that's in charge instead. So I think there needs to be a recognition early on in the piece of who's good at what, and complementary skill sets to build up a really, really good, strong team and it doesn't necessarily just have to be the technical founder. Being the CEO is the only model.
Very good point. Mike, what about you? What is it? You might want to build on that team theme or another element.
Look, team's important, no question. And I think it's important to say, though, where you start when you start with as an early stage investor in a deep tech company, you can't expect it all to be done yet. That's your job, is to help get through that process with them and to help them. If one thing that's not useful is if they're not flexible, open to feedback or willing to adopt new ideas, if they're willing to think about areas that they don't know about, like business development and marketing. That's fantastic. One of the things I say is that if you want us to invest in you, I know you don't know much about sales and marketing. What I need you to do is commit to be world-class at it at some point in the future and build towards that. I know you don't have it today. That's okay. We'll build that process out for you. But you've got to recognise what stage you're at.
Yeah. And Scott, what would you add to that mix?
Oh, when we have a new investor come on board or if we're courting an investor, one of the first things that I do is I will meet them initially and have a discussion one-on-one, very important. But then I also invite them to attend our corporate office. I do, and both of you are exactly correct. I introduce them to my team. I explain the roles that each of these individuals play into the development of our products, and what marketing, whatever it may be, and that's really important. But one thing that's at the end of the day, the question is does your investor trust you? That's it. That is where the rubber meets the pavement. So your objective as a founder is to explain to the investors who you are, what your background is, exactly, introduce them to the team, but it's do the investors trust you? If they trust you, then they're going to move forward with the investment. And if they don't trust you, if they find any doubt that you're going to be successful, all deals are off. So it's all about explaining to them your journey, your plan, and business is chess. Plan your next moves and plan them far ahead and show the investors that you've planned, because you just like in the military, you act very quickly, but you act very quickly. That is on the foundation of methodical planning. And if you can show that you have a methodical plan in place to win, and you've designed your products to fit into the market, and you know the market, you understand your competition, boy, you're going to win a lot. Your hit ratio with investors is going to be a lot higher. But you also got to be working with the right investors as well. Some investors just don't have the understanding of the industry that you're in, and therefore they're going to have a lower offer than someone who understands the industry that you're in. And they're like, yes, I get it. Oh, I'm really excited about this. So yeah, I suppose that would be my answer to your question.
What I might do now is go around one more time in terms of let's put our minds to the investor perspective in terms of, for the investors who are watching this and starting and thinking about investments in this sector, some of the qualities, or like how can you actually be supporting the founder in the long term, whether it's not just money, it might be your connections, it might be your coaching. It might be just being willing to cope with bad news. So let's think about some tips for our investors in terms of what you need to be ready for, so that you can be most effective and less surprised. So I'm going to go Natalie, Mike and Scott again, and then we'll probably wrap it up.
So we're talking about a deep tech founder in the first instance?
Well, an investor contemplating investing in a deep tech business. What do they need to be thinking on? Yeah.
I guess that they either have some particular interest in the technology or the market. It's better, I think, that they definitely have some sort of affinity in there, and it's not just money going into something that they don't understand at all. So Scott's observation that you need to trust them is implicit, but then also understand and be able to fill those gaps where they don't have the knowledge or the expertise. So if they've been primarily in a research organisation and they're a founder of some deep tech, then there's a lot on the commercial side that they may not know. It just depends on, what experiences they've had before and whether they've gone out and done this thing before or it's their first time. So understanding from that perspective, understanding the role that they may want to take, because in some cases they want to perhaps still have a hand in the R&D side of things and ongoing development of the next stage. So understanding from them who the team is going to be and what gaps there are going to be in the team and what role that they're best in is I think a good thing for the investor to investigate.
Thank you. And Mike, from your point of view, some advice to our investor audience.
Look, I think you have to assess your own capabilities in a particular space as well. I mean, I guess giving scientific advice to somebody developing a cancer therapy when you've come from being a dentist or some other success in life in a different space, probably not that useful. Do you really, well, first of all, are you going to be able to build enough of these investments to actually get a portfolio win out of this that makes a difference, that gives you an overall return out of your portfolio? That's one question. Are you doing this because you really like the concept and it's really, a fantastic thing you want to get behind, or are you making a business out of investing in these companies? So you need a portfolio strategy, maybe, or you just need to acknowledge that you're 100% behind this idea and you love it and you're doing it because it's as much a passion project as it is a proper investment. And then how much value can you actually bring to those people, or are you better off helping them get off the line and stepping back out of the way and maybe helping bring some people in to help them? But too often you get investors that put their hands in and sort of try to, rearrange stuff that doesn't work out so well, isn't their segment. Lots of stuff they don't understand doesn't work so well.
Thank you. And Scott, some thoughts for our investors.
No, I've invested in a few companies myself, and so what I like to invest when I have the ability to support the company in a positive outcome, right? So if I can link them to some contacts that are going to help them to be more successful, provide them opportunity to market, that just makes sense, right? So I can invest and then grow my investment. I invest and grow my investment. And if you're an investor that has that ability and you have that, the connections to make a certain type of, or a certain area or a certain, type of company successful, you're really leaps and bounds ahead of the competition, so because as a founder, that's what I look for as well. So we can get money at any moment, right? So, but it's all about getting money, but taking an investment from somebody who can actually help us to get to market quicker or whatever it may be, right? So there's different components there, but establish and agree as well on involvement levels up front. So have that communication with the founders. Say, look, this is the level of involvement that I'd like to have in your company. Would you welcome that? And boy, that sure does help to build trust as well, because that trust goes both ways. An investor has to trust the founder, but the founder also has to trust the investors as well. So and trust is a two-way street when it comes to business. Yeah.
Well, we could probably talk for a lot longer on these topics, and I can see that our time is up. So I hope for our audience that you've got a lot of useful insights into both the landscape of deep tech, and whether you're a founder or an investor, learnt from these excellent speakers some of their hard lessons so that you can not make the same mistakes. And thank you to our panel. So thank you, Natalie. Thank you, Mike. Thank you, Scott. Thank you, Wholesale Investor, for making this possible. And thank you, audience.
Thank you as well, Liz. Wonderful job. Thank you.
See you, team. Thank you.
Thank you.
While companies' access to investors has improved, individual investors continue to struggle with access to the strongest, fastest growing companies within our region. What makes WICapital unique is our commitment to make a difference in this ecosystem, to find the gaps where we can bring our expertise and know-how in order to assist investors and make an impact in their investment management process. We have created WICapital for investors to participate confidently in exclusive and scalable investment opportunities. This will be alongside a community of investment professionals. We are committed to nurturing your investments through innovation.
Again, an amazing panel. And for anybody who wants to reach out to individuals from that panel, Brella is your best bet to actually have a one-on-one meeting with anyone that actually was talking about a topic of interest to yourself. Now, going into the next segment, we're talking about fintech investment opportunities.
Another favorite area of mine.
Yeah, and a staple of STEM, because a lot of fintech now involves high-level technology.
Yeah.
And so in Australia, the stats here show that the industry has actually grown from 250 million in 2050 to 4 billion in 2021, which is an amazing growth story. Yeah. And we know the typical Australian players like ZipPay and Afterpay, which have absolutely made it.
Well, if you
globally.
look at the different space, you've obviously got buy now, pay later. You've got companies like Airwallex who have just recently, become a unicorn. Like for Australia, has done a really good job. If you think about fintech innovation, it really sort of come out of the UK. You see a lot of fintech innovation coming out of Asia, and also you can count crypto as part of that sort of fintech innovation. And if you look at this sort of sector now and the companies that are coming through, the beautiful thing that they've got access to is they've got access to network effect, whether it be via messaging platforms. It's not just getting access to the internet, but also the network effect that can be created with a lot of these companies. The more and more they bring on, the more and more customers they bring on, mean that the growth rates that they can achieve are far beyond what they could possibly have done 10, 20 years ago. So once again, from an investor's perspective, when you're looking at fintech, I said, especially a lot of investors are interested in sort of B2C, sort of B2C fintech plays because of that sort of capacity, and also understanding that a lot of the, how can you put it, a lot of the current sort of banking infrastructure is very outdated. The processes are very inefficient and also very costly. But so all the suite of fintechs coming out at the moment, they remove a lot of the inefficiencies with the current industry sort of standard, or the industry sort of stalwarts. Unbelievable levels of agility with these startups, and I guess motivation for a decentralized framework as well with a lot of these startups as well. So, and that actually is a main feature of a lot of the opportunities that we have coming up. So we have 4 exciting investment opportunities in the fintech space presenting now. And if any of them are of interest after you've watched them, please feel free to reach out to them via Brella, but also request access to their crisp deal rooms.
My name is David Kay. I'm the Executive Chairman and Chief Investment Officer of LitiCapital. LitiCapital is the next generation of fintech. We are private equity for the blockchain. Now, the best place to start is at the beginning, with my background and the background of my partner, Jonas Ray. For the better part of the last 10 years, I was one of the founding partners and portfolio manager for $1 billion plus private equity firm based out of New York and focused on litigation financing. Jonas is the founder and owner of the largest private asset tracing and intelligence firm in Switzerland and one of the largest in Europe. And at its core, that's what this investment is. It's a private equity investment where you would be investing with experienced managers who have acted as fiduciaries and ultimately generated returns for investors for the better part of a decade. Now, one thing that's worth noting is we're also one of only 3 companies that have regulatory approval from Switzerland to list our shares as tokenized equity. Said another way, your investment in the Liti token is regulatorily compliant in Switzerland, which is where the company is based. Let's talk for a minute about litigation financing. Is the highest performing asset class in the last 10 years. It's beaten out private equity generally, real estate, credit, and hedge funds. And again, at its core, that's what this investment is. It's an investment in litigation financing. As a Liti token holder, the minimum return that you would be entitled to are the cash flows that come from the investments and the portfolio that we create, curate, and ultimately monetize. And as an investor, just like in any private equity firm, you would be entitled to 80% of any profits that the company makes. But here's where it gets interesting. Here's where there's a big differentiator. And here's why we're very excited to be publicly listed on the blockchain, is your investment in LitiCapital also comes with 2 additional things. The first is a one-way crypto optionality. What does that mean? What that means is that our token is denominated in Ethereum. That is the underlying currency of the token. So if Ethereum goes to 0, or Bitcoin goes to 0, or those get regulated out of existence, what happens to your investment? The answer is nothing happens to your core investment. Your core investment is in a private equity company, and the underlying assets that we create in the portfolio, and again, monetize for you, you would still be entitled to your pro rata portion of those proceeds. Here's where it gets interesting. And here's where it's a one-way option. Now let's say that Ethereum goes up to 15,000, about 5 times above where the price is today. Then what happens? Then, even if we as managers don't make any money for you, and the investment is a break-even investment from the perspective of the portfolio, because the underlying currency denominations in Ethereum, the value of your investment would go up 10 times. So downside protection is the private equity investment, but there is a massive one-way upside in crypto, a one-way upside option in crypto. And that's one of the things that we're most excited about. So let's talk about one of the claims. We have invested in a number of claims. We have 3 claims already on the book, and we have an owned portfolio of 5 more. Now, one of the claims that has gotten a bunch of attention is we are representing a group of 700 traders in a claim that they have against Binance. Binance, as you may know, is one of the largest trading entities in the world, and certainly the largest crypto trading entity in the world. Just to date, through the end of June, they've done over $5 trillion of transactions. The 700 traders that we are looking to represent, in fact, it could be thousands. We believe thousands of people were negatively impacted by Binance's actions and unactions around what's called the May 19th event. You can see on your screen some of the press that we've gotten, and I would really encourage you to click on the link so that you could take a look at my CNBC interview and my forecast interview with Angie Law. Let's talk a little bit about valuation and liquidity. If you look on your screen, you can see some of the core statistics. Since LitiCapital went public, we have more than tripled our token price, and our current market cap is about $40 million. Most importantly to me, our liquidity is somewhere between $1 and $6 million a day, which means that in private equity and litigation financing, another downside that's really rectified by being able to participate and be listed on the blockchain is illiquidity. One of the reasons that litigation financing gets such high returns is because the assets are generally illiquid. By investing with us, not only do you have a one-way crypto optionality, but you also have liquidity on what generally is an illiquid investment. I also believe that we are fundamentally undervalued. We do have a $39 million market cap today, but with just the 3 cases that are in our portfolio, we believe that the potential asset value is in excess of $250 million. We own 20% of $1 billion plus case. We own 10% of a $200 million plus case, and we own 30% of the Binance claim, which could be in the hundreds of millions. Even when you discount those potential rewards backed by risk and time, we very much believe that we are fundamentally undervalued today at a $39 million market cap. So what's the ask? A couple of asks. The first is, check us out. Take a look at the Binance claim, take a look at some of the press articles and interviews so that you can get an idea of who we are as managers and the quality of the underlying assets and frankly stewardship that we would give to your investment. The second is, I'd like to expand the portfolio. My goal in the next 6 months is to get to 10 to 12 cases under management. And that's a size portfolio that makes sense, and it's a portfolio size where I feel comfortable that I will be able to generate the same returns that I have over the last 10 to 12 years, which is 30 to 50% cash on cash returns each year. To do that, we'd like to raise $30 million. Now, wholesale investors who we've known for quite some time, they've negotiated a discount on the current trading price for their investors. So to the extent that you are interested in investing, please let us know and we will give you a discount to the current trading price of Liti tokens. And we would love very much to have you join the Liti community. I hope all of you are having a wonderful day, and I hope that you reach out and continue to do some diligence and ultimately join us here at LitiCapital.
Hi, and welcome to today's presentation on Cashero. My name is Bionabu, and I'm the co-founder and CFO of the company. So who or what is Cashero? Cashero is a blockchain-based payment ecosystem that provides a secure platform for high-yield savings, multi-currency wallets, and instant fee-free internal and cross-border payments. Cashero recognizes the appeal and requirement for cash savings, but that inflation, high remittance fees, and payment friction are a problem for individuals and businesses across the globe. And Cashero was founded in 2020, following 2 years of idea conceptualization, research, iteration, and development to solve these problems. We're now in launch phase and will be available for public use later on this year. Now, as a team, we've been involved in blockchain and cryptocurrency technology for over 10 years and have brought our combined experiences and knowledge of banking, finance, and technology together to solve a global savings problem and a transfer problem, both of which were highlighted during COVID-19 pandemic and have and continue to remain a particular issue in developing countries where reliable financial infrastructure is, of course, still lacking. Now, at present, approximately 2 billion people remain unbanked or underserved, meaning that a whopping 31% of the global adult population still has little to no access to banking. This is an issue that Cashero can alleviate, and a demographic of people that Cashero can service where other people have failed to. As we all know, inflation has a disastrous impact on savers, as interest rates offered on savings globally has reached an all-time low. In many cases, the real rate of inflation is greater than the rate of interest offered. Cashero thus has been built to remedy this issue for savers and investors globally, and Cashero is also addressing the outdated fee and charge-based model pushed by many of our competitors. So, what's our solution? Our solution is an all-encompassing, safe, secure wallet ecosystem that services individuals, businesses, corporates, and charities with a high interest saving account offering between 2 and 5% APY, where users receive and view their inflation-beating interest in real time. A platform that offsets local currency volatility and devaluation risk for users, with less stable currencies giving them access to reserve currencies like the US dollar, the pound, or the euro. Instant, no or low fee internal and cross-border payment transaction systems with no hidden charges. A digital payment system that allows users, businesses, and charities alike to send, request, and receive money globally with full transparency. And ultimately, an offering that provides full flexibility with no minimum balance required, no monthly fees or penalties for withdrawals, and of course, no minimum time period as well. Now, of course, there is a mature and sound reasoning in why we're providing all of these features and services at little to no cost. And that is ultimately to drive users to our platform. With users comes transfer volume and deposit of funds, or funds under management. And it's on these funds that Cashero can create an interest and derive a profit. Now, using a combination of blockchain technology, smart contracts, and lending protocol, we're able to yield farm and create an interest safely and securely for users and the platform itself. Now, with a demand or a need in the decentralized finance space for over $42 billion, Cashero therefore acts as a liquidity provider and lender in this space to create interest that is ultimately passed down to the user. Now, when we come on to market size, the available market size or available market is absolutely huge. It stands at over $29 trillion as it spans over 4 core service sectors: global remittance, instant payments, multi-currency exchange, and high yield savings. With Cashero operating once live in over 120 territories across the globe, we geographically diversify and alleviate the risk of earnings for businesses and also for investors, as events like Brexit or COVID take little or no effect on the business. In fact, there was actually an acceleration of e-commerce business across the globe during the pandemic, with 9 out of 10 e-commerce businesses seeing double-digit revenue growth in 2020 and over $960 billion in transactions conducted on mobile payment platforms in 2019 alone. Now, of course, there are competitors in each of these 4 fields. However, most of our competitors focus on 1 or 2 of the services, not all 4. But that doesn't necessarily mean that we'll be successful or unique. What makes us unique is the way that we actually operate the business. And we argue that the competitor systems and the software that they use is archaic, outdated, and costly, which is why they operate this fee and charge-based model. Now, global remittance, depending on the provider, can cost the sender anywhere from 1 to 13% of their funds, and currency exchange anything from 1 to 3%. Now, by using new era technology combined with conventional banking principles, we're able to strip back these costs, saving users money on their fees, whilst giving more back to their user in interest, rewarding them effectively for lodging their savings with us. Now, not only are we alleviating payment friction, we're also revolutionizing the way banking is viewed and conducted, driving consumers and businesses to our platform, and also increasing the potential for a company buyout from another financial services provider. Now, since March this year, we've actually rejected 4 buyout offers. These offers have come from royal families, telecom providers, and other banking platforms. For more information on our revenue metrics, we've provided low, medium, and high summaries on our pitch deck, and more detailed financial models can be made available on request. Now, of course, it's all well and good to have a nice idea or concept, but that's not all that a business needs. So where are we today? So we've taken much of the risk away from investors as the platform's now built. So the development risk has been reduced for new investors, and in fact, will only be iterated and adapted once new partners or cash on-ramps are needed to service developing countries. Therefore, much of the risk or focus now rests on raising the awareness of the platform itself to attract users, and that's where the bulk of the investment is going. And we're operating 2 main strategies with tried and tested providers and models that have existed for decades in financial services. So we work and have worked with Ladder and HVSEO, our CMOs, for over a year pre-launch. These providers have been responsible for the user acquisition for Monzo, Credit Suisse, Travelex, Aviva, and Chime Bank. These data-driven providers have analyzed the spread between iOS and Android users, which demographics to target, average deposit sizes, the percentage difference between download and active users, and cost per acquisition across over 50 territories. We've also spent this year, 2021, developing agency and white label versions of the platform to allow us to partner with existing businesses and corporates, such as financial service providers, gaming and gambling companies, insurers, and wealth managers, to bring their existing user base to our platform on a revenue share model, therefore catalyzing and adding to the user acquisition projections that we have. Now, this neatly brings me on to Cashero's business goals and targets. Our target paid user base is anywhere from 3 to 16 million users globally by December 2024. Our target assets under management or depositors funds is around $5 billion by December 2024. And our target is a listing on the UK main market or NASDAQ by December 2024, or trade sale to a competitor or challenger bank between the months 18 and 24. Now, for references and metrics, all user acquisition and AUM models are available to investors, and they're visible on our pitch deck. We also currently have 10,000 pre-registered users and committed contracts that will begin once we go live and launch. Now, with Cashero now in launch phase, it really is an interesting and exciting time for investors, which is why I invite people to reach out, read more, and connect with us. You can view and download the app pre-launch on iOS and Android stores. However, I should point out that it's not yet available in all 120 territories. I should also point out at this point that the window of opportunity to invest is narrowing. For further information, please connect with us via our deal room on Crisp or email us directly at invest@cashero.com. Thank you for listening. Thank you for your time today, and we hope to welcome you on board as an investor in the near future. Take care.
Hi, my name is Derek Stewart. I'm the founder and largest investor in PaysMe. PaysMe is the first ever fintech super app designed to help small business communities in their transition to the digital economy and to unlock their full potential. My experience spans 37 years in finance and technology, and have a 17-year public track record managing hedge funds, with only one down year in 2008. Prior to PaysMe, I co-founded the BNY Mellon Global Hedge Fund business, growing from a startup to $2 billion of client capital around the world. Two of my early stage investments have already achieved exits in the last 4 years of 3x and 10x my original investment. PaysMe is by far my largest investment, with £780,000 of my own cash committed to the business. It's also my passion and focus, as my mission is to fundamentally transform traditional small business communities to make a lasting impact, helping them to save time, reduce costs, grow revenue, and compete with the big boys. Many small businesses are the engine of our economy and beating heart of our local community, so in some cases, dating over 100 years old. So it's mission critical that they survive and prosper. I'd now like to run through the key drivers that make PaysMe's business model unique and why I believe we're on a path to become a household name for SMEs. PaysMe is the first ever fintech super app for SMEs, helping in their transition to the digital economy. The problem is there are over 400 million SMEs globally, with many lacking the financial or digital skills to compete with the big boys. The pandemic has only made things worse. PaysMe solves these common pain points by embedding multiple financial services on a single platform, including mobile payments, digital banking, e-commerce, insurance, accounting, and lending. SMEs are the engine of economic growth, innovation, and social development. And with 6.8 million SMEs in the UK and Ireland alone, it's a huge market, and PaysMe helps to accelerate this digital transition. The super app approach brings together a range of embedded financial services for our customers, generating multiple recurring revenue streams and data to enhance our future product roadmap. Our customer-centric model is designed to put SMEs at the heart of everything we do. So we customize our solution for large traditional sectors that are typically in the cash economy. This includes black cabs and licensed taxis, markets and high street traders, football and rugby clubs, and we're also exploring opportunities in other sectors with similar pain points. We've created some good traction with over 12,000 customers in 59 locations. We've generated 1.7 million in revenue from card payments and also paid out 49 million in cash flow to our SME customers. During COVID, we demonstrated our agility and resilience by signing up 1,000 new customers, launching payments into 2 new channels, closing a funding round, and launching the PaysMe digital banking app with debit card. PaysMe's business model is designed to be highly capital efficient with low fixed costs, multiple revenue streams, and scalable platforms. We expect to reach profitability in 2022 and scale from a solid base to deliver over 50,000 customers with an EBITDA of £36 million over the next 5 years, with plans to list on the UK Stock Exchange within the next 3 years. In closing, our goal is to raise up to £1 million of funding in return for 16% equity to help accelerate our growth by investing in fintech services, marketing, and building out the team so we're ready to scale. Our mission is to become the #1 supplier of fintech services to local communities of SMEs up and down the country and eventually overseas. We'd love it if you could join us on this exciting journey. Thank you.
Unimo has been created to be the private investment network for a sustainable planet. Globally, there are millions of small and medium-sized businesses, SMEs for short. Many of them have ideas and expertise that could provide a better future for all on this planet. SMEs are the lifeblood of innovation and economic development, employing some 40% of the world's workforce. Despite the advances in the funding market, many SMEs still find the process fragmented and difficult to access. Meanwhile, there are some 25 million high net worth individuals and family offices who want to invest in the idea, product, and solution of the future. But most only see the limited opportunities that may be brought to them by their wealth managers, mostly on a local basis, a process that hasn't changed in decades. Unimo believes it's time for change. Looking at global disruptors such as Airbnb and Booking.com, they dominate their industries by doing some things consistently well. They're focused, independent global brands, and they have a great quality control through customer feedback. Unimo intends to bring that same disruptive approach, global reach, consistency, and great customer experience to the funding of private companies. Unimo will be a new and leading brand in that space, helping mostly SMEs to raise between 2 to 50 million per transaction. It will take time to create a global brand, but in 6 to 8 years, we anticipate that we'll have achieved the following. A network with 1 million high net worth individual investor members, some 5,000 plus companies funded per year, over 25 billion per year introduced to sustainable businesses, approaching 1 billion in revenue with 50% EBIT, 50 local offices, 1,400 employees globally. Please look at the extensive information about Unimo on the CRIS platform. We look forward to hearing from you. Thank you.
Thank you, Lucia. Let me tell you more about Unimo. The world needs new solutions to tackle the climate emergency and provide future sustainability. However, the funding market for SMEs and investors remain complex, relying on antiquated who-you-know models. Unimo will create a new infrastructure to introduce investors to private companies at a global scale. Unimo will be an independent introducer, not an investor, not a broker, and not an investment advisor. We will work with not compete against, brokers, VCs, and other existing market players to achieve global scale. Investment in private companies is a $2 trillion marketplace. This combines hundreds of thousands of companies and 25 million high net worth individuals, family offices, venture capitalists, private equities, and institutions. Unimo will be the leading global player, focusing on company funding between £2 to £50 million per transaction. Unimo will be the only platform combining the following: high-quality team with broad international experience, global technology platform to create efficiency, scale, and easy access for our clients, local offices in key international markets, high-quality due diligence process, and Unimo ESG standards. Unimo search engine providing filtered opportunities, high ethical standards at all levels. We have assembled a senior team with international experience as well as strong in-depth industry knowledge. We have created this team to build a global brand with an incredible growth rate. We have talent acquisition expertise within the team to recruit the best people. Unimo will be a volume business. 70% of revenue will come from annual membership fees from investors on the Unimo platform, mainly high net worth individuals and family offices. 30% of revenue will come from companies from due diligence, investment readiness, and introduction fees. Much has already been achieved through thousands of unpaid hours. The initial management team is working well, with a passion to drive the business to become the most influential in the private investment market. The Unimo platform is nearly completed. We have received universally positive responses to the roadshows and PR events across Europe. Unimo requires some 10 million of initial funding. We need an initial 1 million now and a further 9 million during the following 12 months. For equity, Unimo offers up to 25% of its ordinary share capital. We believe Unimo could be worth 4 billion within 6 to 8 years. This valuation is based on the company's forecast of 500 million EBIT. At that valuation, investors in this initial 10 million round could see returns of up to 50 times their initial investment. This is an opportunity for investors to get in at an early stage of this exciting and disruptive new global business on a scale never seen before in the private funding market, with an experienced management team capable of delivering. Client testing and completion of all processes and systems will take place over this initial period of 12 to 16 months. We will open headquarters in Switzerland and London, then enter into Germany and Luxembourg. In addition, we will begin our entry into the US market and elsewhere. Develop artificial intelligence, robotic processes to speed the company due diligence process and monitor companies post-investment in an effort to reduce headcount. Establish a membership group of advisors typically required by fast-growing companies, including ESG experts, recruitment consultants, project managers, and non-executive directors, board advisors. Create a private stock exchange market, making it easier for investors to sell their shares in private companies. Unimo is a socially motivated but commercial entity. We will introduce money to where it matters most. Join us. We will make a better world together.
Great opportunities, all as exciting as the other. Now, if anybody is interested in any of those opportunities and talking to a representative from those companies, feel free to reach out to them again via Brella, one-on-one meetings, request those meetings, or again, request access to their deal rooms. And those deal room links will be in the description of this video. Now, this last panel was one of my favorites by far. And this was the reason it was one of my favorites is, number one, I was moderating it. But also number two...
We always do like hearing from yourself.
Who doesn't? And number two, it was centered around bridging this gap between professional venture capitalists and very technical founders. And we cover topics such as how do you not fall in love with your product as a technical founder? Yeah. How do you pivot to the more commercially savvy types of entrepreneurship that you need to actually enable to progress in this sector? And also, how do you speak to investors who are VCs, who are high net worths, and who are sophisticated, and how do you change your pitch accordingly? So it covers all those topics, and we've got...
And I'll just give some commentary on just some of the people that are involved, like Xian Hoi from SG Innovate has been a sort of long-term friend of mine. From the very first time I went to Singapore in 2014, he was the person that was educating me on the Singapore market, on the VC space, what the opportunities and so forth. And really, once again, as someone that gets a helicopter view of everything that's taking place in STEM, and SG Innovate are not only looking at opportunities in ASEAN, they're also looking at Israel, they're looking out, they're looking across the globe for opportunities. So, his perspective is one I respect greatly and always have. And then you add to that, obviously, Main Sequence Ventures, we've talked about it before, they're probably the longest sort of, deep tech sort of investors in Australia, and have been investing in some incredibly exciting companies coming out of the space. And I'll just mention with Horizon 3 with Michael Sullivan, I know one of the people involved in that company, Glenn Cross, as a former CEO and COO of Oz Biotech, as someone who has traveled the world, who has met with life science leaders from around the world, that is them. That is the networks. That is the experience that they're bringing to the table. I said we've brought together some incredible people to be able to provide these insights. So as I said, as you're watching this panel session, you said the experience, the networks, and the understanding, the visibility that the people involved in this next panel session have is just second to none.
Absolutely, and you've got Peter Vrains there from Neutromics, who just recently finalized a $6 million raise in the life science sector. So these are people who have direct experience, who are now willing to depart that wisdom to the audience, and we hope you enjoy it as much as we did. Hi all, and welcome to the STEM Roundtable today with the topic of bridging the gap between investors and founders. And with us today, we have people from both sides of the ecosystem, founders and professional investors and industry participants. And just to get started with, I will ask everyone for an introduction as to who they are, the firm they're from, and their duties at that firm and their position. And again, the outcome of this panel, just so it's very clear to the audience, is to give you an insight into the mind of an investor when it comes to investing in STEM companies, but also insights from founders who have successfully done it themselves. And that's why everyone is here today. So just to start with some introductions, and we'll start with you, Stella, if that's okay.
Yeah, sure. Hi, everyone. I'm Stella Zhu, and I'm a senior associate at Main Sequence Ventures. We're a deep tech specialized firm, which means all our portfolio companies have some sort of connections with Australian publicly funded research. Our mission is to solve the greatest challenges in the world with science, because we truly believe that the research give the companies an edge in the very competitive global market, and it's great to see a lot of founders coming up with great ideas that is really solving the insolvable problem with new technologies. We have invested in 40 companies by far, raised our second fund this year, and have been investing quite actively in the market. We are now a $500 million fund. Very happy to chat with any companies that's playing very active in the STEM field.
Excellent. Thank you very much, Stella. And that's a great shout out to the audience, anyone who is interested and falls into that category to reach out. HH, just keeping on the investor line of things, would you like to give a brief introduction as well?
Sure, Sydney, and thanks for inviting me to be here today. My name is Sian or HH, as most of you will know. I'm the head of investments for SG Innovate. We're an early stage investor in emerging tech startups. I don't want to use the term deep tech because I think Stella has already used it. Our coverage is global in nature, so we're not just confined to particular geographical regions. We're backed wholly by the Singapore government. We've been a fund for about 5 to 6 years, with about 80 odd portfolio companies and about 6 to 7 exits through SPECS, through acquisitions and the like. Ironically, in the last 1.5 years has seen the most exits in our portfolio for a variety of reasons, obviously, at very decent returns. Areas that we are focused on, obviously deep tech or emerging tech is a constantly shifting target. So at the current moment, our focus is very much on biotechnology, agri-food tech, advanced manufacturing, which includes semiconductors, additive manufacturing, and of course sustainability, because that's what everyone is talking about. So things like hydrogen economy, circular economy, all these things would be very much of interest to us. Personally, I was a founder myself, so I understand some of the challenges that founders face today. Exited my company, it was in the AI space about 15 years ago, and then I sort of bummed around in SMEs, MNCs before landing in this Singapore government fund. Thanks, that's all there is.
Thanks, HH. And Peter, we'll go to you at the end because you've come from the founder perspective. We're going to actually start with you, but just Michael, just your introduction in line with that as well. Thanks.
Yeah, sure. Thanks for having me, and great to be with all of you, and thanks to Wholesale Investor. Mike Sullivan, Chairman of Horizon 3 Biotech Fund. We're a purpose-driven fund investing in companies tackling global health challenges using leading-edge technology. Right. So we are Melbourne-based, invest globally, have 4 portfolio companies so far, and what I do here is run fund strategy, capital raising, marketing, branding, team, governance, and we've got an experienced investment committee full of life sciences experts that do deal sourcing, DD, and negotiation. So I can talk from both sides, on the capital raising side as well as the searching for investment and DD side as well.
We'll definitely get you to switch hats throughout the panel there. Thank you, Michael. And Peter, finally with you, if that's okay.
Yeah, thanks, Sydney. Great to be here, everyone. Peter Vrains, co-founder, co-CEO of Nutromix. We're developing a wearable medtech device that can monitor any molecular target continuously and in real time. We've got about a dozen sensors that we've already developed. And we're a team of about 20. We've raised about $10 million. For about 4 is non-dilutive grant funding. We've just recently completed a raise of about 6 million. And we'll be going to the market middle of next year for about a 30 mil plus raise. What we're all about is a world with 0 preventable deaths due to a lack of timely molecular patient data. It's a really big problem. It permeates throughout the whole healthcare system, and we have a technology that can solve many problems in healthcare that is born from this lack of continuous molecular data. So if you think about what continuous glucose monitors have done for diabetes, it's a $4 billion technology. Spawned companies like Dexcom that's currently valued at $52 billion. we have a technology that can go well beyond glucose to any molecular target. So it is a seismic evolution in precision medicine.
Excellent. And Peter, just hearing that, then it's no surprise you just raised 6 million as well. So let's start with that. Can you explain to, because I've actually spoken to Warwick before, who he came on for a Chris Media podcast recently, and we'll start from the founder perspective because that's the general audience here as well today. You just came back from a successful raise, and so you have some wisdom to depart to the audience as to what you did to raise that capital and how you pitched, and perhaps any pivoting strategies that you had to take, that you had to undergo in order to make it successful. So can you talk to us about that journey and how you initiated the raise with investors, given the very technical nature of STEM? So I guess the type of investors you spoke to, just to summarize, and how you approached them at the beginning. And then we'll get some feedback from the investor panel as well.
Yeah, it's a good question. When I speak to entrepreneurs about investing, there's one key message: always be in capital raising mode, right? This is not you start and you stop and then you forget about it. If you're a startup, you always have to be in capital raising mode. Just the intensity changes. That's the number one takeaway that I want people to know, because it's so important. You think of it, if you can't knock on a door and ask someone for money that doesn't know you, this is a trust business. They have to be, they're going on a journey with you. And if you knock on a door and say, hey, you don't know me, but I've got a great business, do you want to invest? That's not the way to do it. You want to take them on a journey, and you want to show them, you want to tell them what you're going to do, then you want to do it, and you want to keep doing that. So you want to show that you can execute, that you're trustworthy. You need to be transparent, and you need to be warts and all. Like, we do a monthly newsletter. It's the good, the bad, and the ugly, right? That's literally, that's what we call it. And we give it to them straight. And they're okay. The fear that investors going to see something and they're not going to want to talk to you, it's the fear that actually drives more investors away than the topic you're trying to hide, right? Just be transparent, tell them the warts and all, and you'll differentiate yourself straight away. Yeah. But I just wanted to say that because I just think that's just the really important thing, and a lot of companies don't do it, and it's to their detriment. So for this raise, we try as much as possible to use warm intros. We did some cold outreach, but it's a slog. Yeah, again, everyone here, I'm sure, gets lots of emails from people you don't know selling your stuff. I don't know about you, but most of them I don't follow up with, because otherwise that's all I'd be doing in my day. So warm intros is really important, and that's really a test of the entrepreneur. Are you able to get a warm intro? Because if you're not, do I want to invest in you? That's a little test, right? So the ability to do that is important. And then really, if you're taking the position of always in capital raising mode, it means you're reaching out at a time you don't want money. You don't need money. You're talking to them to say, hey, I'm not taking anyone's money here. I'm just introducing our business. We will be going to the market, but I want to take you on that journey, and do you want to come? Yep. And that is a much nicer position than, hey, we're running out of money in 4 months. Can you're almost desperate. You can sniff the desperation on a company when they're in that position.
Great, and I can understand that. It's similar to getting a call from a salesperson to renew your subscription 1 month before it ends, and knowing that the real reason why they're calling and where were they for the last 12 months. So completely understand, Peter. Now I'm going to take that and ask the investment team here. So let's start with you, Stella, because something Peter just said there was quite important, and I know it relates to main sequence, because Mike, the partner at Makesense, Mike Nichols, has mentioned this to me previously. His want for transparency in the process, the good, the bad, and the ugly, and that was there not only to show that the entrepreneur is honest, but also the entrepreneur is almost hyper aware of the risks and is already mitigating those risks accordingly. Do you resonate with what Peter said?
Yeah, exactly. I think for the company perspective, it's always good to bring us along to the journey. I agree with Peter. Especially, I think it's creating that experience to see how the team execute and how they're growing a business effectively. And MenSequence take a relatively more proactive approach in working with the companies, in the sense that we usually will take a board seat and we will work with the founder quite proactively in terms of building, bring in the talent, building a team, as well as a strategy. So it's great to see how they execute along the way. And at the same time, I always find people who can create you a good experience and show their dedication with their actions is very strong. It's really strong when you say, I'm going to do this in the next year, and you achieve that. That brings people a lot more confidence in your ability to do what you're going to do in the future. And it's fine to have problems that you need to overcome. That's just the nature of creating a company.
Absolutely. And so 2 key points here: honesty and obviously a newsletter aspect to constant investor relations, and as Peter mentioned, to constantly raise as well, or be in that capital raising mode at least, so that investors know that you're not just coming for them for the capital at the point of the raise, but you've been in touch with them throughout the entire journey. Now, thank you, Stella, for almost reaffirming that and telling us how Main Sequence does that through their own methods. HH, I'm going to go to you now and see how you relate, similarly to how I've connected it to Stella. Is this something that you see as important when dealing with your portfolio companies?
Yeah, and I think transparency and honesty is vital. The truth is, during the due diligence process, all the warts are going to come out anyway. So it's best that you be upfront early on. And if the investor can't stomach it, then they're probably not the right partner for you. We like to have that sense of honesty and collaboration with the startup founder, because as Stella said, it's not possible for a company to be completely formed at a very early stage. There are definitely going to be gaps that they need help to fill and all that. And it's better that we understand the weaknesses of the companies before we make the investment. We have a development team that comes under the investment portfolio that I run. And that development team actually tries to identify the kind of training, the kind of engagement that's necessary to plug those gaps. So it is actually in the best interest of the founder to let us know what the problems are early on. And hopefully they actually know what the problems are. So the most terrifying thing for us is that the founder themselves don't know that they have these issues, that they are, that they are the best at what they do, and therefore, they don't, brook any dissent in the approach that they take. That to us is actually a deal breaker. So I think these are things that probably permeate across the whole venture capital industry. So I'm not basically saying anything new, but it is definitely something of importance to us.
Yeah, and obviously the risks are monumental when it comes to STEM as well, in terms of execution. And so I guess a way of portraying that for any founders watching is a risk, or at least something in their deck or their presentations, or by whatever means they are presenting their opportunity, is a risks and mitigations aspect to that pitch. Now I'm going to go to you, Michael, and ask, because you're uniquely from both sides of the ecosystem, aware of how this works. So when you're raising capital, how are you ensuring that the investor relations is intact and almost fertile ground for that raise? And also on the opposite end, as an investor, sometimes in the investor mindset, what do you like to see from the companies coming forward?
Yeah, thanks. I loved Peter's answer and the builds. I'll touch on one thing Peter said that I think is great. I mean, I call it talking to fear. So I think when you're asking people for capital, you got to say, this is venture capital, private equity, it's high risk, it might not go well. But then you also need to get them excited about the opportunity and the aspiration. I think that's really important. That's what people ultimately end up buying once they understand that you've got a plan to manage the risks, and they go in willingly. I think in terms of how buying decisions, or how the buying process works, or what a family office or a wealth manager or an entrepreneur's own investment decision process is, I think you have to ask questions about that when you're asking for capital. How does the investment committee work? How often do they meet? What is the process to get there? Because every organization is different. And then you might have different buying influences or people that you need to talk to on the way through to make sure your bases are covered, because it only takes one ancillary comment that's actually not even material, but somebody had a bad experience with somebody who's a non-exec director or just offering advice, and that actually makes investors pause and say, well, is this team really worth backing? Because early stage especially, it's a lot about the founder, the vision, the team, and whether they can pull in good people to help them. So I think that's critical.
Thank you, Michael. And Michael touched on something that I want to expand upon with you, Peter, and that's essentially the fact that there are different conversations with different investors and different organizations, as you put it, Michael. As it is very individualistic in that a no from one investor doesn't mean a no from all the investors, which is a key bit of a key bit of information that a founder should keep in mind when they are presenting, and not to feel so dejected after the first rejection. So, Peter, did you experience that with a different communication style depending on different investors? Can you give us maybe an example of that, if that's okay?
Yeah. If you're worried about rejection, don't be an entrepreneur. I mean, you're going to get lots of it. You will quickly steel yourself to it and be okay. Just, again, walk into the fear. Don't worry about it. It's par for the course. We had this round, we had 70, the last one we just passed 70 investor meetings. And a lot of them were no's, but not no forever. It was we were too early at that time for a lot of those funds. So, a lot of the US ones like Andreessen and Arch and Founders Fund, and they wanted to see the next step, which now they're in play, all those guys. And it's good. You want to do your homework, obviously. You don't want to go cold into these meetings. You want to know who you're talking to. You want to get their background. Are they technical? Are they financial? Who is it? You got to be professional about how you handle this, because you change your communication style accordingly. So someone that's if we're meeting up with a team that's they brought in some deep tech advisors, or they're very technical, then we might bring in one of our technical people, for example, into that meeting. And so you just modify it. So it's really just about doing your homework, knowing who you're talking to, and maybe even just before you actually have that meeting, if it's a first meeting, ask some questions. Just say, here's how we're looking to approach it. Is that what you're looking for? And they'll quickly tell you. They'll say, yeah, that's great. Or they'll say, oh, well, actually, we wouldn't mind a bit more of an insight into product market fit, or a bit more of an insight into the tech, or whatever. And then that gives you a heads up to say, oh, I'll bring in this person or that person that can talk to that in more detail.
Absolutely, and that's such a great point in terms of actually understanding who you are about to speak to. And this is a problem that we've seen at Wholesale Investor in terms of the companies that sometimes come on board who are perhaps very technically minded and then don't have the resources that you do, perhaps, Peter, to get someone who suits a certain personality. So to the investors, and we'll go back to you, Stella, correct saying you do speak to founders quite often, perhaps asking questions and conducting your due diligence, and sometimes it is it is part of their duty to actually pitch you or your team, for instance. I'd love to know whether the advice you can give to the very technical founder who doesn't necessarily have the commercial savviness, or has needed the commercial savviness up until this point. Is there any advice to them on how to sort of gauge that down and to bring that side out as well? And is it of benefit to them? Maybe it's not. I'd love to get an investor's standpoint.
Yeah, I definitely feel like it's, as Peter said, know who you are talking to is very important. Then you can tailor the conversation, or even decide whether it's worth to have the type of conversation that you're having, because it's really down to the fit. There are a lot of great companies out there that we wouldn't invest, not necessarily that there are not good companies. We sometimes love their business very much, but it's just not a fit for us because of our specialization. And then coming into how technical founders can elevate the pitch a little bit, I really love it when companies can do a demo for their product. It creates this experience for you to understand why their product is very valuable. Once we have a company coming in with a pack of drinks that they have produced that's not in the market yet. So you're the first to try, and you can, that kind of feeling really demonstrated what they are building, to give you a sense of who they are, what their value is, and what their vision is in the future, and get you the first taste of supporting them. I find that's a very, very strong point. And last, I think this kind of communications or pitch are always two-way communication. When you are showing your product to the investor, you are also assessing whether they're the right fit for you. So don't be afraid of ask questions. We love to ask questions as investors, and we love when other people ask us really good questions too.
Great point on the two-way communication and a product demonstration. That's an excellent point. HH, go to you. What do you think about this discussion around how a technical founder communicates to a potential investor? Does it concern you if they're too technical and you don't see that commercial side, or them spruiking the commercial viability up front? What do you think?
I think technical founders should stick to what they're good at, but I think more importantly, they should be cognizant of the fact that this is a gap in their experience and their knowledge, and that they're willing to work with people that will help them to bridge this. I think there's nothing wrong with being a technical founder. The question really then comes about as to whether or not what they have has any real commercial value. I mean, we have had technical founders pitch to us with great products, but they only provide an incremental, a very small amount of improvement versus the existing systems. And you know that that's not going to fly, because the adoption requires a considerably higher barrier to entry. So I think I like talking to technical founders. We do a lot of investments in the quantum space. Problem with technical founders is that you can very quickly end up in a technical discussion, and then you lose sight of the fact that it is still a business. At the end of the day, they're going to have to sell the product, and there has got to be a market for it. So if you're a technical founder, not just focusing on the product would be good, understanding what the market wants, what the market's willing to pay for it, and how you're going to get to market. That kind of stuff would probably get us a lot more excited than if you just came to us with, hey, this is a quantum device that's going to outsell everything else, and you're like, okay, I'm going to have to guess how that's going to work.
That's a great. I'm going to expand on that in a second. Michael, you see this from both sides. You find the companies that come to you to pitch, but you also talk to the investors and perhaps have to relay that pitch as well, right? So, what with this communication, what do you think is the most effective form of communication for a very technically minded founder?
Well, whether you're technically minded or not, good communicators can sort of play in any field, and they make the complex simple. It might be pithy, but if you can't explain what the business is and what you're solving in a lack of intricacy that people can understand, you're missing something there. So that's a sign around communication. I think that is the most critical component. And then, the assessment process for investors is actually pretty, mostly standard, right? They're going to look at IP, they're going to look at the addressable market, they're going to look at the team, they're going to look at the technical components, and all of that is pretty standard. The founder doesn't need to cover all of that with their own skills. They need to be self-aware that their team's got to cover it.
That is so. You and HH are on the same point with regards to being cognizant of the fact that your skills may lack in some department, and are you aware of that is a good sign, and how are you going to fix that is even a better sign. Great. So the next question, it will be back to you, Peter, because I'm very interested in your journey to date. But one point that HH brought up was technical founders, I'm going to get rid of the word technical, founders in STEM in general often might get bogged down may fall in love with their products, but the product may not be the thing, or the service may not be the thing the market's demanding, and they don't understand why. It's like, no, but I still want to go with this. And I've spoken to an untold amount of STEM founders who resonate with that exact feeling. Did you feel that at first when you were developing your product, going through the R&D phase, and how did you sort of, if you did, how did you quash that and bring the commercial side out again?
It's a really good question. There's a cliche. It's a solution looking for a problem, right? That kind of sums up what we're talking about here. That we work in an industry where it's easy to fall in love with the things we do, right? It's to us, it's the world, but to everyone else, is it the world? Well, you'll find out when you enter the market soon enough. So it goes to this notion of generalist or specialist a little bit. And there's a bit of talk lately around that. There's books written on it. And there's no one size fits all here, right? There are multiple paths to success. And you look at very successful entrepreneurs, and there is not one size fits all. My background, I'm a chemical engineer, and I've been an entrepreneur for 17 years, and I've had previous companies and exits, but even though I do have that technical bent, I position myself as a generalist, right? That's how I see what I do, and because there's advantages that I feel I have as a generalist coming into this, because I can bring the team together. And I can fill gaps, and that's my job. That's what I do. So in terms of answering the question, I'm just giving context, sorry, to get to that point. But what I see often is a lot of work on the product, and an afterthought is product market fit. Is there a market for this product? So there's a real lot of development, because that's what founders are often passionate about. I have a technology I know really deeply, and I'm going to develop it. I'm going to debug it. I'm going to get it so good. And then secondly, is there a market for this? Or it's very surface. It's not very well thought out. So what we did as a company, we pivoted multiple times. We are agnostic technology. From a technology point of view, we're agnostic, right? I don't really care about the technology. We've landed on technology now, but through the journey of the last 3.5 years, we've moved and pivoted early. And I think that's really important, is that be prepared to not fall in love with any one aspect of your business. If the evidence dictates that you need to change, be agnostic. Be about the solution. So what is it? What is the value proposition that you're trying to provide? Go deep on that. Really understand that, and then optimize a solution to that, as opposed to the other way around, which is go deep on this technology that I'm in love with, and then try and figure out down the track how it's going to give value to someone. And I just see personally a lot of that. I'm in love with my tech, and that's all I want to do. Because the product market fit is nefarious. It's hard. It's hard to conceptualize. You can't see it, feel it, but that's the bit that's so important. And I think that's the bit that I think a lot of entrepreneurs would do well to really go deeper on that earlier than what they perhaps do sometimes.
Well, I saw that in your elevator pitch at the beginning, where you basically started with the severity of the problem, and then basically the competitiveness or effectiveness of your solution is the second half of that. Now, Stella, I'm going to come to you on this line of thought centered around product market fit and how to best delineate that to an investor. How have you seen that best represented or presented to yourself in an effective way? So let's bear in mind that there's a lot of founders in the audience who may be on their first, second, or third pitch, very early, at least in general. How do you think they could best present their product market fit to a sophisticated professional investor?
So there are a few different aspects to it. Maybe I'll divide it and give you a few selection of that. The first one that I think of is probably, what do you need to believe to be true? Because as I think one reason why companies need to ever change is that the market is changing forever. There is sometimes when you build a product and there is a fit, the market can change tomorrow, and it might be a very totally different story. So you have to have a very convincing idea and vision of your future, that your market, that your product will be fitting in, so that that is probably one thing that I find quite powerful when companies mention that in the future, we believe that this is going to happen, and if that is true, then what might be true. We actually do that in our investment memo as well. When we are investing in a company, we're not only considering, say, the next year, but also the years to come to think about what is a bigger future. And I think that's especially true in terms of the quantum investment, because the market today is going to be very, very different compared to the market, say, in a few decades. The second one is in terms of the product market fit. If you can find evidence or any background information to support that, that would be great. That can be customer verification. We always love to hear a customer success story or case studies. That's why investors often do a lot of calls with current or prospective customers to understand how they make the decision to go with your product and what is driven behind that. So that's probably the 2 points I find really, really important during the pitch process. I think that's also quite important for founders in terms of setting up the vision, as well as constantly adjust to the customer needs.
That's great. So in summary, I mean, obviously, I'm just a very brief summary for those watching as well is evidence-based thesis of each company, evidence-backed thesis, and of course, the effectiveness of, I guess, proof, social proof, customer proof that it is effective. We're starting to see that this capital raising process is really a sales process, because that's very similar to a sales process, right? You talked before about the effectiveness of your DD process, and you said that all the ugly things are going to come out anyway. And I'm sure your team will bring that out and really vet the opportunity as to whether there is a product market fit. But how have you seen it best positioned, I guess, with founders coming to present to you?
And I think it's a good question, and Stella covered quite a few points as well. We are in the emerging tech, deep tech space. The solutions that go to market may not go to market tomorrow. They might go to market after passing regulatory hurdles, FDA, so on and so forth. Even in the manufacturing line, you need your ISO standards to be passed and all that. So I think structurally, we have identified this as a weakness within the pitches, both by the founders as well as by the investors. So I set up a team called the Corporate Engagement Team, and this innocuous sounding team actually goes out and talks to corporate HQs of a lot of the biggest multinationals, because when you look at deep tech, the ultimate, or I won't say the ultimate, but the immediate customers are likely to be the multinationals, the big firms. You're not likely to be selling a quantum solution to the consumer market. So you don't really need to poll them for their opinion. But getting an understanding as to what the thinking of the board members of these companies are, the CEOs, the C-suite, where they're placing their money, what approach they're taking, enables us to very quickly decide whether or not the approach that this founder is coming to us with is the right one, or that it has the right fit. So we're not always going to get it right. Every investor, operates within the paradigms that they operate in. I'll give you an example. I recently turned down a company that was looking at using scaffolding for ophthalmology, for the degeneration of the cornea, and we turned them down because all the ophthalmology companies that we work with, Suntan and all that, were telling us, we are no longer looking to put things in the eye. We are looking at stem cell therapy and all that. So that's one where it's a case of the product might have worked. The product probably is excellent, but the industry has shifted to a completely different approach to the problem. So we decided to pass on that deal, even though I think the team was a pretty good one.
Oh, this is great, because to the audience, I hope what they note down from this is, if you do have that market feedback at hand, or armed with that market feedback, it's a very powerful thing when approaching sophisticated professional investors. Michael, with you, have you seen a very effective method or what is your process of ensuring it's a product market fit when you talk to your portfolio companies and those you've invested in?
Well, we're a growth stage fund, right? So we stay away from startups, and in one sense, we're doing that to de-risk, but in another sense, we're doing that to handle this question. I mean, 3 of the companies that we've invested in as a biotech fund already have products approved in the EU, right? And so we are going in to tackle the largest market, going into the US, right? So for us, we have evidence of robust clinical data, and we have a plan to design a proper US clinical trial. So I'll stress that. I think specific to the biotech sector where there's high regulatory hurdles, what you see some companies do to try to address this problem of market validation or users is they might actually design a trial that is not really what's going to satisfy the FDA. So you might do a pilot trial in Australia with a small cohort and designed in a manner that once you take that to the US, there's no guarantee that that's going to succeed. So I think that's a big call out for cash-strapped companies in this sector, that you've got to be careful on how you design that stuff and get the right guidance and advice, because it might actually not only cost more in the long run, it'll cost time as well.
Excellent. Thank you, Michael. Now we're wrapping up, and I want to start with a bit of a fun, rapid question. And we'll start with you, Peter, from the founder perspective, and then we'll go to the investors on the panel. And we're going to talk about a major red flag when speaking with an investor. And it's weird to ask a founder that, because with investors, it's usually all green flags. But a major red flag with an investor, and also any call to action to the audience today.
Good question. Okay, a major red flag from an investor. Look, I think if we're not just seeing a alignment of passion and excitement, if it's business as usual, if it's going through the motions, red flag, we're not interested. We're not looking for. We're looking for investors that are in alignment with us and our culture and how we see the vision. So that would be one red flag that you sometimes see, just because, and that's mainly just non-alignment. They're maybe in a different sector or whatever. You're gonna have to give me the second question again. Sorry, Sydney.
A call to action. There's an audience of investors watching as well. Anything you want to say? You want to redo your elevator pitch?
Call to action. Yeah, sorry, I was so engrossed in the red flag question. I forgot about the second one.
So the red flag's there to filter out the audience who wouldn't make it anyway. And now the ones who are still here, what's your pitch?
Okay, so we, as I mentioned, we are always in capital raising mode. Every week we are having investor meetings. We're going to a round that is around $30 million US. Just so that's for scale. So if you're an investor and you are, you're able to participate in a round around that sort of size, then reach out. We've got LinkedIn is probably the best way. We'd love to talk to you. And we're transforming precision medicine. That's what our technology.
Can you give us the elevator pitch again? Because it was really good. I like it. Yeah.
Oh, now you're testing me.
It was bringing preventable deaths down to zero. Something.
Yeah, the vision is a world of zero preventable deaths due to a lack of timely molecular patient data. And put that in perspective, literally hundreds of thousands of people die every year because clinicians lack that data. And that's the truth. Sepsis, there's a whole range of disease states where people die because they don't have this data. And that's the gap we are filling, and we're doing it right now. So that's the exciting future that we're working towards.
Thank you, Peter. Thank you. Stella, a red flag when being presented to by a potential investment opportunity.
I proposed that we do a reversing order because shall we get Michael to speak first?
Okay, Michael, do you want to go first? Stella's put you on the spot.
Look, I mean, a red flag is just around honesty. It's actually okay to be challenged with a question and not know the answer, rather than evade that. Just be upfront and then circle back go back, do the research and find the answer and reconnect, that's fine. So sometimes as an investor, it's about seeing how people react to stress in the situation, and just be honest in that situation. And look, for Horizon 3, we are raising $100 million, so we're out raising capital. We've deployed $8 million to date. We're on Wholesale Investor because we're looking for the last 12. We've got $88 million of commitments, and we want to close at 100. And we're here to leave a legacy. Like everybody on here, we're here to make a lasting improvement in the world. And we believe the future of biotech is brighter than the past. So it's a sector that's outperformed in the last decade. It's going to continue to do that. So I think no matter how you invest in the space, whether it's via a fund like ours or in the listed market, we think the future is incredibly bright. And so we'd love to partner with you on it if your value is aligned with us.
Thank you, Michael. Thank you. HH, red flag and the call to action.
Yeah, I think red flags, there are just so many of them. I think I'll just take from the experience of our own portfolio. The truth is, we have written down about 5 companies in the last 5 years. That's not a heck of a lot for STEM, but nonetheless, we learned lessons from the 5, and that none of them were ever written down or shut down because of either the tech or the market opportunity. And it was always because the founders couldn't get along. Founder dynamics was the key reason why a lot of these companies fell apart. And we should have known that early on, because during the pitches, we had founders that sort of, interrupted each other. We had founders that would sigh when the other one was talking, and that was at the very early stage. So, we have sort of picked up on some of those non-verbal cues as to, perhaps they might have the greatest product, they might have a great market opportunity, but if the founders can't get their act together, it's just going to be, it's just a recipe for disaster for all of us. So I think that's a major red flag for us. In terms of call to action, we are global investors. We invest all over the world. So far, not yet in Australia. So if there are opportunities to invest there, I think that we'd be open to that. Because we don't lead rounds overseas, we would be open to participating in rounds where there's already a lead investor that's priced it, and can more closely help the companies that are on the ground. So I think that's pretty much about it from me.
Thank you, HH. And Stella, back to you.
I echo HH's answer in terms of the founder alignment. We find usually a good team is what it takes to support each other in difficult times. I guess probably another thing that we have been talking about a bit more now is the learner versus knower mindset. Learners are the ones who can adjust and happy to take in suggestions with an open mind. Knowers are people who feel like they have the answer to everything, which is a very dangerous mindset, because there are so many new informations coming in. I think being able to leverage on other people's help as well as advice and have a very open mindset as a founder is quite important. In terms of call to action, similarly, I think if you're interested in what MenSequence is doing, which is to solve greatest challenges with science and build great companies, feel free to subscribe to our newsletter or follow our Twitter account. I'm also happy to chat if you are interested in learning more about our funds or wanted to pitch to us. Feel free to reach out. My email is stella.zoo@mseq.vc.
Excellent. Guys, and look, this has been an unbelievable abundance of information and wisdom you've given to the audience today. We really do appreciate it. Thank you all for joining us. We will have your details with links to call to actions at the description of this video. And yeah, look, again, thank you. And to the founders and investors in the audience who are watching this, we will be obviously digesting this information and distributing it to them as well. And please feel free to reach out to anyone who's been represented on the panel today, if you do pass their red flags, that is. Thank you all, and hopefully we can have this sort of discussion again in the future. I appreciate it.
Thank you all.
Great, thank you.
Thank you.
Thank you for joining us for day one of the STEM Virtual Investor Conference. I hope you enjoyed the different sessions. I hope you enjoyed the companies which presented. Obviously, there's still networking going on inside Brella. I highly recommend you go inside the app, network, chat with some of the companies that you've actually seen throughout the day or that you may have missed presenting. They've all got their booths set up in there. The information is there. And also we've got the companies set up in Crisp as well. We've set them up to have their own deal rooms inside there. The majority of companies will have frequently asked questions, and also they'll have their pitch decks, etc. So everything we've done is just to really simplify the experience for you as an investor. Please go and take advantage of it both inside Brella and inside the Crisp app. And I'll see you for day 2 tomorrow.